Yo, what up, everybody? Cheers, cheers. Let's get this started. Week number 2, starting to get in the swing of things, you know? All right. Okay, so look, I did check the market today. It was a little bit of an up day for the stocks that Roaring Kitty portfolio was often dealing in anyway. So I tried to move the screen around a little bit, see things better. It kind of seems like I'm kind of blocking stuff. Whatever. Okay, so it looks like some of my commodity prices aren't working right now. Hopefully, within a couple minutes, they correct themselves. But let's see what happened today. Some things are breaking. All right, I just had to refresh the spreadsheet, so it may take a couple minutes. That's okay. Oh, so energy was up today, 3.1%. So that explains some of that. Some of the moves that I saw in the Roaring Kitty portfolio today, because I saw, as you know, there's a good chunk of energy exposure in that portfolio. If we see here, what is it? Still 20%. Oh, I made a couple of trades today that I'll update in. Actually, I used that Evernote thing, the things that we were taking notes in, so it was actually kind of helpful. But did I make any energy trades? I don't think so. It was some other stuff. But anyway, it's still 20%. So I updated the spreadsheet too. This is up to date. 20% here, and then 12%. Okay, so that explains that. It's just energy being up, or oil being up 3%. Oh, energy being up. So, see the commodity. Damn, I need those commodity prices to fix, you know? I'll check those out. If we just do this. I mean, look at that. It's so up that we can't even see one little day. Is it whatever it did today? Is it today? Is that up to date? Say the 10th? Yeah. So it didn't do much. But for whatever reason, people rotated into it. That's cool. Okay, and then, all right, got to get in the hang of that. Well, you can kind of get a feel for what commodities are moving too, because if like gold and, well, let's check. Damn, I can't believe that's not working. That's a bummer. Let's just do this. See, this is a good backup. Check commodity prices right here. These might be futures too, so. Gold still around 2. Wow, silver bumping up against 30, huh? Wow. Okay. Look, it sold off. What was that, Friday? And then right back up. Oh, yeah, we got back-to-back stream days now. That's right. Cool. Shit. Okay. Still way overbought. Okay. Palladium, 2,200. Crude oil just about flat. Natural gas. All right, so yeah, what's nat gas? This is worth checking up on because of that whole natural gas exposure. Down today. But a big day, huh? Started up, ended down, but still way up. That trend still looks intact if there's a natural gas trend, right? Okay, but overall, pretty quiet day, right? Not much happening. It stuck out to me. What did value do? Is there a value ETF here somewhere? Yeah, there you go. S&P 400 value 5%, 4%. Well, there you go. Okay, that explains a lot of the moves today, right? That's why I'll see a move in a couple of stocks I might be tracking. Then I'm like, oh, wait a second. What's actually moving today? And then should I move this over? I feel like this doesn't even help moving over. I don't know. We'll see. I can move it over as needed if I pull up a balance sheet or whatever. I think it's a little bit distracting. Anyway, did you see the value's up 5%? And so that's why I looked today. I saw a whole bunch of the positions up. So I'm like, all right, let me just pull up the dashboard. Let me just see what was moving today. So 5%, 4%. So and then in particular, oil, right? Energy, natural gas. Wait, what is this? Oh, this is a natural gas type. I think this is FCG. I think that's exposed to natural gas producers. So if I do FCG and I go to Yahoo, and I think I can pull up the holdings for FCG. I'm pretty sure. Is that what this is? I think I may have. I was tracking this way back in the day, 2015, 2016. All right, so yeah, that's what it's doing. I mean, it's okay. So that was up today, huh? The hell? This is what I mean. So natural gas, they're not really highly correlated or anything like that. You have natural gas down today or whatever it was. It appears as though it was down, and natural gas players are up. It's not perfectly correlated, or what is? You know what is? But clearly that explains a lot of the moves in the natural gas players today too. Okay. Anything else I wanted to check? I guess nothing really else. Lumber was something that was on our radar too. As in just keep tabs on it. I'll wait till is it 664? Oh, I don't have that. Oh, I should add a shortcut for that. Jeez, huh? Look at this thing. Looks good. Wow. Okay. Is it bullish for the real estate related stocks? Perhaps. Um, wow. Okay. Okay. All right. Got a sense of what was happening. Well, and we don't. One other thing I might check in on when I see values up. One thing I've been kind of checking lately is like, what are the other styles? What have they been doing in particular, like tech and the riskier type? So if we go into this risk column, we see the oil and gas is up. A lot of these names are going to be up. Alcoa up again. Wow. Yep. Tech up again. Nice. Nice, nice, nice. Caterpillar up. Wow. Okay. Toll Brothers, there you go. There's your real estate related stocks. Huh? Who knew? Who could have guessed that based on what lumber was doing, right? Cummins, wow. Okay, a lot of the risk on like industrial type stuff that's in the Roaring Kitty portfolio up today. Okay. And then what about some of the AMD down 3%? That's kind of noise. Blockchain was up today too. Bitcoin. I don't have the Bitcoin price, but okay, Bitcoin Trust. What's that doing? Is that GBTC? That's a way to play Bitcoin. I don't. Doesn't this still look kind of interesting? I think it still looks bullish. If I had to, I don't have to take a guess, but if I were to take a guess, that's what I'd say. It still looks bullish. Blockchain, yep. That's that Riot ticker. Oh, marijuana was up. Canopy. Oh, okay. Yeah, what are these doing, Wow, so some oh, it's down and then it was up. Oh, a little quick dip there, a one-day fix, huh? This is another interesting industry, right? I don't have any exposure to it because how the hell do I value this? I don't know. But it's one of those, if the trend's looking decent, I might. I mean, it's looking kind of, where did it caught a little bit of test, little support there, right? Testing the technical analysis, I mean. And let me check the ETF. I want to check this real quick. I don't think we've checked it yet. Months ago, I was kind of keeping my eye on this when everything was selling off, thinking of just another way to play the sell-off. I mean, it's a real tough. They don't generate any free cash flow, as I recall. I haven't dug in deep in a while, so it's like, what do you do with this? And so this is why this is more of a trendier type play, but also just assessing risk. That's all. Okay. Anything else? Virgin. Oh, I think they did an equity offering today. This Virgin Galactic. I think they did an equity offer like $19-20, which is is this still in the portfolio? I forget. Okay. All right. So Green Day. And then let me check the portfolio. I would see if those commodities fix themselves. Cool. Okay, and then here you're going to see a lot of the green in this column right here, right? BXC, huh? Still crushing it. Still looking good. Is that holding up? I don't even think I trimmed it yet. I think I've kept it. It just looks so damn good, Eventually, I got to start trimming it soon because I got to reassess the value. Maybe we'll do that tonight. I don't know. Oh, let's make a note. Oh, wait. Is today the 10th? Yeah, today's the 10th. I just looked. Oh, I think they got bullet points, right? I'll just say check out BXC. BXC? Question mark. It's good enough, right? You don't want to waste time. Take it your notes. Got to keep moving. P10, all the pump. So yeah, I did look at this one today because I pumped. We talked about that one the other day, and it's not hasn't broken out or anything like that. But a lot of these are on the verge, and it still looks good. It's a big position in the portfolio, but I haven't even trimmed it much. I even thought about adding some more. I actually think this is why it's such a big position in the portfolio because I think the downside's fairly limited. Obviously, in a huge sell-off week, I don't know if we'd see this again because they started filing their financial statements and a bigger investor got involved. I think we talked about that. But it will get halved. It's a risk-on stock. It deals in a volatile industry, but it still looks kind of interesting. Like it feel like it could be a double with relatively minimal downside. And when I back out, yeah, I don't know. Again, how much is it right now? It's over 1%. But if it starts breaking out, it's getting pretty damn close. I might buy a little. That's the thing. I know with value investors, you only want to buy when it's like super cheap, right? And you only want to buy at those low prices. But I think it's important to buy on the way up too. This is a different approach, a different style that I've added over the years. Is that I mean, you average every value investor, you buy the stock and then it sells off an extra 20, 30, sometimes 50%, 70%, and then you average down. That's how it works, right? But and then you try to get that average cost down. And then you keep on, even if it stays low, maybe you average over time too. That's another way to average in, not just average down, but average over time. There's probably, I don't know if there's a phrase for that, but there should be just averaging in over time. Dollar cost averaging, I guess, right? And then what would you do? On the way up, after it bounces up, or even it starts moving up, if it starts to look like on the chart that the trend's turning around, and if you're following the fundamentals, if those are turning around, why wouldn't you not just keep buying on the way up? You know what I mean? I think a lot of people do that, but I remember my early years, it took me a while to like pick up on that because they're like, it's going up. Let's maybe even sell it early. But now it's like, now add to the position because now it's you've suffered through 6 months of the price lagging or dropping, and now it's like, all right, now you can get a little bit extra on the upside. Not always. It's always, this isn't like a hard and fast rule. Nothing I say is, but just something I definitely do more these days. And so here I have this big position in ProPetro, and I'm like, maybe I'll get it to 2% or something like that. Maybe. What I should do, maybe BXC, and let's do this one too, because I should analyze those financial statements. I mean, when I first invested in it, I didn't have the financial statements. I just had the cash and the debt and do my best to assess the liquidity. But now we have those financial statements, so I can pick it apart more thoroughly. Okay, but that was up today. FTK, don't need to dig into that. MaxR, I think I might add MaxR in a pullback. I like if it pulls back down to here, 19. I think I'd add to. It looks interesting. What would we say? Let's add on. I think I'll add it a little bit. Sub 20. I thought, if I recall correctly, it could be like $50-$60, and I know that's what the price. I think that's what the price was too. It's really tough to value. I'm not saying this is a high conviction valuation, but the thesis kind of looked like it would be It's difficult for other people to value too, but it had this potentially significant upside that I thought maybe it could get back to this $50-$60 range. That's what I mean. Pull back, then you still might have a triple if that even is fair value. I don't know, but as you may know now, I don't like buying on the. I've done it before. Well, I'll buy on the breakout, and then it pulls back, and it frustrates me more than if I catch it on the upside. Although I haven't really caught it on the upside more, so we'll just wait. I think we're gonna say maybe add to MaxR sub 20. Take a note. You don't need to take action or anything. That's why it's kind of helpful to take notes, right? OVV. So this I get some exposure here too. It's still kind of in this box, but kind of breaking out, getting up there. These all look similar. You know what I mean? I think one thing I might like to do today is pull up the charts and like scroll through. But they all look kind of similar, or they're all bumping up against. This is a natural gas player, OVV. Oh, they have natural gas exposure too, but it's more oil. But they're all kind of, and then you start with pump 2, pretty close. They're all kind of in this little box area. And this is just timing, right? Technical analysis is just trying to time this stuff. You know what I mean? Or adding to the business, and that's what I'm using it. The fundamental analysis I've already done. That's what we do most of the time. But now, as you're looking at the portfolio, analyzing the portfolio, it's more a question of add or trim, do nothing, that type of a thing. And I find the charts are kind of helpful for that. It's kind of a shortcut. CWH kind of it had a big sell-off last week, but now it's kind of stabilized. I took a peek at this. See how it's like it's holding up pretty well, and it's it's got a damn good strong trend in its favor right now. So you can let it pull back a little bit. I mean, I've already trimmed. I think I've already started trimming, but I didn't trim anymore yet. Whoa, Alcoa moved up, huh? Damn, over 1% now. I think it's like at least 2.5 bagger. Damn, I wish I bought more. What's that market cap? $3 billion. Like that was a safer. Part of the reason I didn't go more is because I wanted it for riskier stocks. And boy, look at that. It corrected smartly. Wow. Ah, damn. Legit, my value, the cost basis was right around here. I thought it might take a little bit more time. If you back out. Oof, look at that. Yeah, impressive. Yeah, and I mean, if there's supply issues here, I know people talk about inflation and stuff. This is the type of environment where you might get it. I don't feel comfortable betting on that. I just follow the stocks, what they're doing. And you're kind of seeing some rotation into this stuff. And And so if there's inflation or some supply issues and stuff, these stocks will be even more in favor than they are right now. Like this could double again, and it wouldn't be totally crazy, but that'd be a five bagger for Alcoa. It's like, that's awesome. And it's a relatively lower risk play to get that 5x app. So interesting. All right. Anything else worth checking up on? Water. This one still looks kind of cheap. $5? I think I checked this one out again. They have they own like the rights to they license out water rights to the oil and gas companies, frackers and stuff, so that they have the water to perform the operations needed. But this might be one checking out. Yeah, I'll have to check this out. More energy, right? But we're following up on an existing position. And it's, you know what I mean? I think I talked about this. It's like a little bit of a different way to play oil and gas without it being directly exploration and production. I kind of like that. But pump is somewhat similar. Okay. I'm just looking at the prices too, seeing if anything's catching my 37%. Oh yeah, this was one of my top small cap plays. This might be even one of the smallest cap companies up here. Oh, FTK. Is it this? Okay, besides FTK, this was one of my top really small cap. Sick, 37%. Damn. I didn't read the news. I did see it was up. Wow, look at that. Did it kiss 5? Look at that. Did it open at 3? Oh. Yeah, you've seen this. I've seen this before though. Had these big jump ups this day. Wow, this is even a way bigger jump. This one looks good. I almost wish I bought more. What I did is I missed this averaging into it. I don't think that the stream had the live stream hadn't quite kicked off. If it had, I probably would have been adding right there. I've been adding on the pullbacks, and I've been doing a pretty good job about it. And then one time I added when I was breaking out. This was when I felt dumb, and I'm like, all right, just continue adding on the pullbacks. And here was a perfect opportunity to, because I don't think the fundamental story changed. I'm sure they had good earnings release, which we can check. I mean, 37%, we got to look into this, right? Whew. I mean, some of that is it's because it's such a small cap company. I wouldn't be surprised if it gave back some of the gains, unless it's really excellent news. Let's check it out. Adjusted revenue is 126. I don't know what the year over year is. We'll see it down below. Adjusted EBITDA. Financial results for the second quarter. Yep. Okay, so you see the huge drawdown, right? I can just pull up for you though what it does. Do I have it? Oh, I have it in here. I'm pretty sure I pulled it in all the way over. I hate that I got to go over here though. That's super annoying. I should just pull it up on Yahoo at that point. Designs Engineer sells a range of cab-related products and systems in North America. They also have that. They have an Indian subsidiary, I think. Does it say here? Is that this? No, that's Titan. That's TWI. Okay. Electrical wire harnesses for the carrying device. Yep. Let's look at... This was a position back in the day. And I still like the setup here. Let me just keep... Okay, big decline. Operating loss. Look at this. See, it's so difficult to predict what the stock price is going to do. You see these huge losses and stuff. And you think, all right, if I know it's going to be going to report a big loss, a big year-over-year decline, the stock's obviously going to sell off, right? Obviously, it's very difficult to predict. That it's that second-level thinking, right? Incredibly difficult quarter, blah, blah, blah. We moved quickly, blah, blah, blah. Generated positive, and as a result of our action, we generated positive adjusted EBITDA, and free cash flow. All right. I mean, even if you're able to report that this quarter, I'll give it to you. You know what I mean? Because a rough quarter for a lot of people. So even if you can say you generated free cash flow, it's a pretty damn good quarter, I'd say. Significant new business, deliver warehouse automation. Oh, I thought I turned this off. Oh, it is off. Go yellow on me. Portland, we had significant new business wins. Continue to feel the global pandemic. Quarter revenues. What's the outlook? Let's just check the outlook real quick. Oh, strategic repositioning. Announced the strategic repositioning of its operations to grow faster, innovate rapidly, and lower its costs. You should always be doing that, right? All right, you need a strategic footprint repositioning to get you going on that. Repositioning involves 12 facilities, company's business. All right, so they're doing some. The warehouse automation in military markets continues to grow with. These actions are expected to support between 100 to 150. All right, so they're trying to grow. Is that, and so people started getting a whiff of a growth type small cap. Expanding our plant by securing new space, repurposing floor space. Whoa, this is an unusual press release. Also, permanently consolidating a portion of our cost structure dedicated to mature markets. Jeez, okay. Interesting that it rose so much on this. Is there a third quarter outlook? Okay, the goal of the strategic is to expand our growth areas. Yeah, people always like to see that. We're on track to reduce our annualized costs. Okay. Okay, third quarter outlook. According to that research, heavy duty and medium truck build is expected to increase approximately 50% as compared to this. Oh, with the second quarter of 2020. Yeah, no shit. Okay. I thought they were going to say year over year. I was going to be like 50% year over year. As the North American truck OEMs, they've been bouncing back pretty strong. Auto stuff. Do I have, yes. This is like the auto sector. And a lot of these companies, ETFs and auto individuals companies. Transportation, utility. Look, this all looks good, right? I'm not going to analyze each one. Trend is up. I mean, this is for a lot of stuff, right? Oh, Tesla dropping down. Oh, yeah. Tesla must be in my risk column there, but it's not being highlighted today. Wow, Tesla up there, huh? And that's not even probably the right market cap for Toyota, whatever it listed. Honda kind of. What about the smaller ones? That's what I want to check. Daimler, yep, up. This is Nissan, slow moving. Kind of looks interesting, doesn't it? Ford. Oh, okay, not that many in here. Good. So maybe I deal more in like the auto related. This might just be true. Oh, this is true automobile manufacturers. All right, we get a gist of the trend, right? Same stuff. NIO. Oh yeah, this one looked. Wow, damn. I think I saw some people talking about that one. Thor Industries. Don't they do like the four wheelers? Is that them? Winnebago. All right, now we're getting a little bit out of the what I came in here for. What about Navistar? You know Navistar? That's one I got a pretty big win out of it. That was one of those. Damn. Yeah, I bought Navistar right around there. Got lucky on that. That was that 2015, 2016. That's what I mean. You don't see these too often where you get these big sell-offs. You saw it 2015, 2016, a little bit late 2018. And then this year. It doesn't happen that often, so it's really important to be prepared. That's what this is, this stream, and what I do. It's largely being prepared for that time, so you know what to pull the trigger on. That's why, I think I said this, but the stream is super helpful for those times because that's what I'm doing and knowing which ones to buy and stuff. Because I've done all the research, I'm ready to go. Anyway, Navistar never got that cheap. Obviously, definitely tracking. Anytime I've been invested in a position in the past, and especially if I got a win out of it, assuming it hasn't gone bankrupt since, some of them do. Sometimes I get a win out of it, and then the company struggles thereafter. Sometimes I get a loss out of it, struggles thereafter. But sometimes I'll get the win, and then it's on my radar. And then because I know it, because I researched it pretty thoroughly, I kind of know the ins and the outs. So I'll get the update, but Navistar never got cheap enough. I was like $15. I'm like, come on. And it was a really similar price action. This is more trucks. They make a lot of stuff. Like school buses and some they make the international brand. Now every time I see a school bus, I think of this company because I see the logo on the grill, and some other heavy trucks and stuff too. But this chart reminds me a little bit of what was that one we checked out? It was the trucking company. I forget which one it was. It was the one I didn't invest in. I forget which one it was. I'll think of it. Anyway, strong bounce back. Okay, so this one's looking pretty well. But this is looking up there. I pulled this up. Is this breaking out? Heavy trucks breaking out? Maybe? Because then that's bullish for a company like CVGI. That's why I pulled this. So it's good to look at this other. What's another one? What about Cummins? They're making engines and stuff. Was that CMI? Ooh. Looks real good, huh? Okay. Damn. It's a good company. It's it's is it engines? Like, but diesel and natural gas. Yeah, diesel engines, right? For the heavy and medium duty truck bus. You know what I mean? So these are all kind of grouped together. How come I don't have a? I must have a chart list for them. Damn, it's already 7:30. Keep it going. Keep it going. All right, sorry. Let's finish this up. Third quarter outlook. Although pandemic creates forecasting uncertainties, we currently anticipate revenues to increase 25% to 3% for the 3 months ending as compared to the 3 months ended June. Why are they doing that? What's up with that? Why is that helpful? To talk about quarter-over-quarter declines after there was it's just not as helpful as year-over-year at this point. Are they doing it on purpose? Anyway, it looks like a good headline. I don't know if what I'm seeing, it warrants that big of a jump, though. Do you? I don't know. What's so compelling about it? Well, part of what's compelling is that it was just undervalued. You know what I mean? But usually you don't see such a smart correction because a stock's undervalued. Usually you need more of a narrative. There needs to be more of a story. What are we seeing on anyone talking about it? Yeah, Steven Simpson's talked about it, and he does pretty good analysis on companies. I think he was even bullish on it at one point. Oh, he wrote on it in May. Oh, someone commented on this. That's worth checking out. Oh, he wrote on it in May. Cool. I think I saw this, but when will the transcript be posted? Is it? Oh, there's a presentation too. Okay. Nah, I don't need to check that out right now. We just kind of got the gist of it. Oh, yeah, we can do it real quick. Can you see that? Oh, yeah, sick. Oh, I can't even see it all. Let's just do this. We just need to get the gist. You know what I mean? What do we need to look through a whole presentation? All right. Do you see the heavy duty build? Okay. So yeah, obviously you're going to see a big drawdown. But their forecast is this what the industry is forecasting? That's what you want to. That's what you want to see too. Are the other folks in the industry they forecasting this type of growth? I bet they are. And markets forecast to recover, low in the cost structure, blah, blah, blah. Changes underway, blah, blah, blah. Pivoting the... See, this is what I mean. That was a little bit of an unusual press release, like pivoting the company, and it's kind of soft stuff. I don't really know what it means for the value of the company. You like to always think that it's going to improve the value, but who knows? Strategic, adding dedicated floor space, moving to optimize space, consolidating space. If I were more dialed into it, maybe it would mean something, but even then, that's not the type of thing that holds a lot of water with me. I just don't have confidence. I mean, I can form an opinion on it. I just don't have much confidence in my analysis of that. Grow warehouse automation business, okay. Market expected to grow 11%, okay. So they're kind of they're trying to change the narrative of their company a bit, which can be helpful, as you saw today. I don't know if this is I don't know if this will hold though. I don't think it's compelling enough. I feel like the market will buy into it because the stock price is already rising, but then if I don't know. We'll see. I'm not really good with the short-term forecast, but I'll add this one. I'm going to wait for a pullback. Enhancing the value of the company. Doesn't matter. I mean, it matters, but not for why I'm invested. You always got to know why you're invested in the company, you know? Trying to get to the outlook. It doesn't matter. Balance sheet. Here we go. Nice. Okay, cash 63. Accounts receivables, debt. Okay, you got cash 63, debt current and long term 154. They got a third of it covered. Line of credit, cool. Total liabilities, total equity 87. Okay. Yeah, I think I'll it's worth exploring. Maybe I'll check it off and we can pull up the fundamentals. But all right, that's it for CVGI. But I definitely it's one of the, like I said, it's one of the more compelling small cap names that I had. Even though, I mean, we didn't do a thorough analysis right here, right? Real quick. It's just, but it had a pretty decent balance sheet. And I think, if I recall, I think Steven Simpson even liked it. I was invested it back in the day too, but I think maybe he was bullish in this. But I bought it before then because this was May. But I'd be curious to read this. I don't feel like reading it right now. Let's get to his conclusion because because I know I've read his analysis before. I spoke long-term revenue growth in the low single digits, but I've cut my margin and free cash flow assumptions. This has long been a low. Yep, I agree. I do believe free cash flow will grow. Management got it to break even, but I think the performance, given the low starting point established by 2019 and 2020, free cash flow growth could actually look pretty good over the next 9 or 10 years. Likewise, the shares do look undervalued on a margin. He's got a pretty good take. I don't always agree. Sometimes I disagree with him, but I remember agreeing with him on CVGI. So if he's still kind of bullish, that right there is a quick shortcut. Now the company's up since whenever this was, May, so it's impossible his thesis would have changed. But that's not the point. I was just checking to see how he viewed it in May, and it was bullish. I don't like CVGI as a buy and hold investment. Me too. But this is a stock that has gotten hammered down in the past downturns, only to rise with cyclical recoveries. I see no reason not to. He's got it. This is my thesis right here. See his bottom line? That's my thesis. It's a cyclical that got hammered down with everything else, and it didn't. As long as it doesn't go bankrupt, when cyclicals come in favor again in the industries with which they're involved, they tend to come back in favor, and that's what you're often trying to look for to get those triples and quadruples and five baggers and stuff. With all that in mind, this is a name to keep an eye on in a cyclical trade. I agree. Any comments on this? No one's even talking about this. You know what I mean? These are great. And how much is it up? No one's even talking about this? Cool. There's already triple. What's going on a four bagger? Sick. Yeah, sick. The question, yeah, it could be an even. This is what I said. It could be even a larger position. I think I'd buy. Did I add on pullback? Oh yeah, I think I might say. I'm not gonna make this claim right here. Add to CVGI on pullback 2-3. These aren't. As you know, I get the buy list and the spreadsheet and stuff. This isn't what I'm gonna do. These are just question mark. Should I do this? Oh, and this was helpful. I told you we did the notes last week on Friday, and this was helpful because I made some of these trades. These weren't trades. I did get a little bit of CNDT just to really get it into the portfolio. Really, we saw enough that at least gets my attention. I think if I can pull it up in the spreadsheet and we'll see. It's a small position, but I thought, all right, that has enough of the unique. It was up today too, like 5%. So I don't like buying on that, but whatever. It's just trying to get it in the portfolio, not a big position. But then I can dig deeper. It's really good to just get the position. You can track it over time and then add to it if you like more and more what you're seeing and so forth. But it's good just to get it in there. I didn't do HBP, BGFV. I didn't do that. Trucking allocation in March. Yeah, that was just me reflecting, Keep an eye on stop loss triggers. And made yourself up. And I added to DBI. Oh, I didn't do this. I just a little bit of DBI. I think it was like a 20% increase in the position, roughly. Getting up there. Okay. Cool. 37%. Wow. 16. And UFI, did I mention? No, I only mentioned GIII, but UFI was the other one. I said... In this other note, I mentioned GIII. It's really GII and UFI. I kind of grouped them all in my head. UFI does like textiles and stuff. How's this looking? I like it. This was a good time to add. Okay, this actually is this might be an adding opportunity right here. This looks interesting. Because as I recall, it's got book value of about $24. Even on a discounted basis, I still thought there was... let me check some of these off. Oh, that's the thing. I'm not going to have the updated quarterly data, though. That's the only thing. But let's check the news on this one because this one might be an ad. One of the world's leading innovators in recycled and synthetic yarns. There you go. Operating results for the fourth quarter, which reflects significant market disruptions that are results of the COVID-19 pandemic. Not provide guidance. Got it. By the end of March, the pandemic started to impact our apparel. Yep. Monthly sales have improved sequentially, including July 2020, the best month since March 2020. Yep. Okay. No surprise there. Wouldn't you expect that every month for the most part? Coming out of the lows. At the onset of our pandemic, our management team prioritized safety and outlook. Yep. Okay. I'm confident that the diverse, proud to return. I don't know why that turned off like that. See the color change on the screen? I don't know. Liquidity update and risk mitigation initiatives. Look at this. Yeah, cash and capital were 75 million. Debt principal was 100 million. Net debt 23. That ain't bad. Right off the bat. See what I mean? That's why balance sheet's so great for assessing just a quick assessment of risk. Capital expenditures have been reduced. Okay. Fourth quarter. All right, let me see the outlook. Oh, this was the end of their fiscal year, it looks like. Assuming no, the company expects sales for each business segment to grow from fourth quarter fiscal 2020 levels at different rates. All right, I actually do want to pull up. I want to pull this one up and CVGI. I like the strong balance sheets, especially right now. In March, you can get away with a sketchier balance sheet. In that it's okay if some of them go bankrupt, right? We talk about that, so you can get 5 baggers, 10 baggers, and stuff. But now at this part, I want to be adding to, I think, some somewhat stronger ones because it's already a bigger position. No, it's not even a percent. All right. I just want to check. I'll check the financial statements on that one, or just the figures rather. Okay, so that was the moves. Okay, 16%. Anything else? Let me just see if anything else sticks out. You know what I can do? Sometimes I like just scrolling from the top of the portfolio to the low because then I have a frame of reference as to how big the position is. But I can also do this. If I really just wanted to get right to it, just do 9. Then it sorts by the daily percent change. And then if we were screening, what I might do sometimes too is I might sort this portfolio view by insider buying, by any of these metrics over here. IPI was up 19%. Interesting. Why? IPI, what's their management team doing? I don't know what they're doing. They didn't even know. So on no news or just commodity play, if IPI is up 20%, was there anything filed? What date was the date? No, there's nothing filed. Nothing. WPRT is crushing it. I think this is already a double. They make like those alternative engines. Yeah, this trend has been up. I missed the opportunity to add, but I got in real low. I had invested in it earlier, and I think I got stopped out, which was a drag. Did I? I forget. Whatever it wasn't a huge. If it was a gain, it wasn't a huge gain. If it was a loss, probably a small loss. I didn't ride it all the way down. But then I'm like, all right, now I bought back in. I think I got in under 1, yeah, because I'm sitting on a double. And I thought I was like, all right, if this thing survives and bounces back, it could do well, and it could do extraordinarily well. It's kind of a unique business model, and that there's not too many stocks like that. Those ones can go 10 baggers on. Actually, this might have been. When did this trade at in the past? There you go. This thing traded at $40 back in the day on hype. That's the thing. Sometimes these stocks can just trade on hype, industry hype, whatever it is. Look at Tesla right now. There's a lot of hype around those types of companies. And what's the other one? NIO? Yeah. And then, so that could happen with WPRT, but I'm not really sure. I don't have a strong opinion on it. It was more just it trades at like it's somewhat a cheap price to EBITDA and stuff, and not even so much a cheap price to book. So I never have super high conviction in these types of plays. But again, sometimes it's about the narrative and the chart and roughly what they earned in the past. And sometimes EBITDA is fine. You never bet everything on an EBITDA based valuation, but sometimes it's fine for a position. Damn, that one's turning up, huh? I don't know if I'd add on this. I just hold. That's just a hold. I don't know what to do with that. Maybe I should get the updated story, see if they're actually changing things around. I think I want it to be up more. I think I want it to be up more than that before I look. Okay. And then Gannett. That company, I wasn't sure if they're going to make it. 10 it goes up. I'm glad I added to that just in time. Sorry, I'd see that thing popping up all over the place. It's because of those damn links. BTU. All right, so just a lot of stuff. Oh, there's your Titan TW. Oh, it is still in the portfolio. I thought they were going to struggle. Dave & Buster's. That's a small position. Yep. Fossil. All right. What was down today? This is a good day to see what was down. Penn. I think I told you I still had Penn in the other portfolio. I forgot the other account. Um, it's one of the best performers. 6 billion market cap. I mean, this is just a nominal position in this portfolio, but I suppose it's probably worth. I mean, I've already been trimming, but I don't have much insight as to how high it could go. I mean, it's a bet on the industry to an extent, but you can only have so much. You can only have so many bets on the industry and that type of a play. I don't know. You have more bets when you know what the value is going to be. Wow, ASPS is still struggling, so let's add that note again. What was this? I said that. Check out ASPS. All right, other than that, pretty flat. How about 6 months? You want to just do that real quick? What's the most insider buying past 6 months? Let's do that real quick. This and false. Yep, Howard Hughes. CLR, that's that ham. Viasat, that's Baupost. Baupost was bought a shit ton of it actually, didn't they? This chart looks interesting. Yeah, check this. 100 million without breaking a sweat. Damn. It's been in, I believe it's been in his portfolio a while. If you're a value investor, you know about Post Klarman. I believe it's been in his portfolio a while. He's got all his buys. Wow, so yeah, how much does he own of the company now? Wow, he doesn't have to file. Yeah, that's a small company for him. $3 billion? That's a small company for him to be dealing in. Ooh. Yeah, that's small. He's a gigantic fund. Is it $20, $30 billion, something like that? And this is a 30 billion. Is this a 3 billion? Is that what I said? 3 billion? Shit. Remember having a communications. I remember when I haven't looked at it in a while, but I looked into it. I'm like, I don't know what this is. Or I didn't know how to value. I kind of forget. I mean, it's a position in the portfolio. It's small, but sorry, what was I just gonna check? I just wanted to check. Pull up well wisdom. See if it's got his updated. He owns 25% of the company. Southeastern Asset Management. No tradition. None of the usual value suspects that I see in a lot of the companies that I deal in. But Baupost, that's Klarman. I mean, you think they don't know their shit? They know their shit. I mean, they get stuff wrong at times, but this is it. What is this? A communications company? How big is it in his portfolio? Ranking 4? No. See what I mean? Look at the other positions, his other buys. eBay, Google, Facebook, HP. He's a big firm. So a 4? 4? Damn. Pull up all these market caps. They don't pull up all these market caps. And this is a fraction, I believe, of all these. Wow. Wow. This trend was looking good, so they faltered a bit, huh? So can I go longer? Oh, okay. Interesting. Real interesting. That's a bullish long-term trend. Yo, we're checking this. What's up with VSAT? Klarman. Owns roughly 25%. Doesn't matter. Fourth largest position. For, what did you say, 3 billion market cap? Huh. Oh, I gotta pull the business over this way. I don't like scrolling over here. See what I mean? Ah, this is annoying. It's right at this point. It's easier to go to Yahoo. Satellite services. Okay, communications product services. The company's satellite service segment includes satellite-based fixed broadband services, including broadband internet access and VoIP, internet and mobile broadband as of March 31st. Shit. Damn. Good industry, right? See the industries I'm off in. I mean, you see me dealing in GameStop. I mean, gaming is a good industry though. In my defense, but I don't deal in many communications company. That's probably part of my not hesitance, but what the hell do I know about communications? They're tough. I mean, if you really dig in, you can get to know them. Damn, $3 billion? Is that really the market cap? And he's getting that much of it? That chart looks good. That's why it's California. Do I got these pulled up? I'd like to check that out. Oh, that's ad hoc. Oh, it's in here. Nice. Let's check this out. VSAT. Oh, this looks good. This looks real good. See the color? There's cool colors, huh? Look at these colors. Whoa. Honestly, seeing that purple and green down in book measured ROE. Here's that definition again. It's like just a crude book measured IRR. And it tends to be indicative of just a historically well-run business. When you're seeing that equity growth, with minimal debt historically, they've levered up recently. That's part. You see this? This is you see DXC. Check this. I think Einhorn got involved with this one. Okay, so I think that I don't know whether it's the same. But look at this. Look at boom, 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 and then I feel like they were getting levered up and have a huge, and then they're having a pullback. And I'm bullish on DXC, and now I see it jumping up. I might need to add to that. But look at this. This is a good trend. And then and Einhorn was involved with it. And then it's generating legitimate free cash flows. I don't mean to get sidetracked, but I just mean so I like to see these things. And this is part of that, the whole trend section of that tracker spreadsheet. Of like I like things that have a good trend. Maybe they pulled back a bit. These ones pulled back. I assume for a big part of it was the leverage they took on. But if you got people like Einhorn stepping in and Klarman stepping in, that's a vote of confidence. End of story. That's just a vote of confidence. Doesn't mean it's going to work out or anything like that. But that's because I see that I'm much more curious about it. So DXC is looking good, bullish on this. I had trimmed it, which turned out to be a good decision because it hasn't done much. So I had already been involved in it. I got involved right around here, right? Like I think my first purchase was right here, right in the. Wasn't a huge position, but obviously I'm annoyed, right here, and then like legit, I think it was like the 27th to 28th. It was right in those low 20s, and then it went boom, boom, boom. Of course, everything was right. No big deal. It's okay. And then I added some, and I was added on the way down because it was a position I was into. And they had real free cash flows. And then I started trimming, and I'm like, you know what? I want to put this cash elsewhere. And it turned out to be the right decision. You've heard me say I've made wrong decisions. This was a good one because I wanted to put it in some other stuff that had greater upside. Now it's starting to look like it's starting to break out, huh? And I do think fair value might be closer to $30-$50. And then you saw where it traded historically, right? I mean, it got up to, and this does it pay a dividend? I honestly forget. It got to $100. $100. You know what I mean? That will be a 5-bagger. It doesn't mean I'm not saying we're going to get there or anything, but price matters. Price matters. And even right here, you get back up to you'll hit some resistance, I guess. I know I'm on DXC right now. This is what I mean. I'm all over the place. I see one thing, it gets my attention, brings me over there. Damn, add to DXC. Look at this. Look at this. This doesn't look good though, right? Boom, 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 boom. That don't look good. What is this, weekly? Boom, 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 boom. That's what I mean. It didn't look that, wasn't that big of a sell-off. It looked like it'd take some time, but it's probably an ad. We'll have to see what, this week, they're going to file, was it this week? Were they out on Friday? All the updated holdings for the funds and stuff? I guess it'll be this week. But we'll be able to check out. I'd be curious. I don't know what Einhorn did with DXC. Anyway, back to VSAT, where the data's working. Let's look at this. Okay, so solid historical equity. This is a tremendous business. Right up until that debt started to get a little bit. Even here, this is fine. It's still adequate. Then they had some losses. Is that what happened? Yeah, some losses. So you can see it because of the accounting, right? You can I can just see what equity growth is doing, and damn, why is it? I don't know if the color's being changed on your end too. It says it's off. I wonder why it's doing that. So this was a really well, but anyway, purple and green, and then you see climate involved too. Ooh, and then the revenue growth too speaks to the. Look at this. This is tremendous revenue growth. Kind of, I mean, it's a lot, but fairly, I mean, fairly rapid growth. Actually, I was gonna say fairly measured growth. That actually looks somewhat rapid. I mean, well, it hasn't even doubled, but it's a growth industry, right? Shit. How's gross margin doing? Improving, increasing, right? Can you see that? Yeah, you see that? Oh, damn. I'm trying to show you the definition of book. Here we go. Sorry about that. That was why I moved that over today. Perfect. Here was that definition of book measured ROE. My bad. There you go. I don't know if you could see it. But I like the revenue growth too. Pretty excellent revenue growth despite this sell-off. It's been halved, right? And then gross margin increasing, EBITDA margin increasing, falling off this year. Maybe they messed up. It's okay if you mess up, no big deal. As long as you don't get put into bankruptcy because of the error. Okay, but the negative simple free cash flow because they probably have a lot of growth capex. No problem. As long as you're growing, right? As long as you're growing and you're able to finance the cash flows. I mean, that's the thing. Are they financing so they're throwing off, they're burning cash right now. How are they financing that, right? They do have positive operating cash flow. But are they issuing debt? Here, let's scroll over to debt. Ugh. Total debt. Yeah, you see the increase in debt. It has tripled in the past 4 years. It's okay, because it's all relative to what? Relative to whatever revenue's done over that time. I should have revenues up here. Revenues have almost doubled. Revenues have almost doubled. And what has equity growth done? Oh, we know they've been throwing off losses, so not much. Okay, so that's the thing. Keep in mind, a little bit of an increase in debt. Maybe they're just stumbling a little bit. That's just a quick take. You really have to dig in deeper to understand. But positive operating cash flow, increasing operating cash. I like to see this. See what I mean? See how it's increasing? But all red down here. So this this isn't on the one, like if this was in a company that like a cyclical type company that I'm dealing in, this would be concerning, right? Because then you're like, how can this company survive? If you're growing, and it's a compelling industry or whatever the narrative is, you have interest in it. You can always finance your business by issuing debt, issuing equity, whatever it is. Which some people don't like, but it just depends. It just depends on the circumstances, and so it's not necessarily a bad thing that you're throwing off cash, right? As indicated by Tesla. Here you go. That's not me voicing an opinion on Tesla. I'm just saying there's plenty of stocks go up significantly with negative cash flows. That's all I'm saying, and for good reason. Company EPS. Okay, but that's the thing. So historically, they haven't made that much in earnings, but I see the free cash flow. The operating cash, not free cash flow, but operating cash flow. Talk about $6, $7, $8. What's this average? $6.70. And the question is, if they were to stop growing, and then what's maintenance capex? You know what I mean? I doubt they talk about it. Maybe they do. You don't see it talked about too often. Oh, they issued shares too. Remember we talked about issuing debt? They issued shares. They issued equity. Oh, they probably issued it to. Did they issue it to Baupost? That was a clean 100 mil, wasn't it? That's a clean 100 mil. Oh, they probably did. That's not a bad thing, but now we got to check it. Interesting. Here we go. Viasat announces $175 million strategic equity investment. Here you go. This is going to be it. Baupost. Boom. 175. You see that? At $39, representing a premium of 2%. Intends to use the proceeds for general corporate purposes related to the purchase, launch, and operation of satellites, potential acquisitions. The need for more affordable, high-quality, faster internet connectivity virtual everywhere in the world has never been more apparent than in today's environment. Yeah, that's true. Global constellation. And, yeah, like how many satellites do they have? I don't know. What the hell do I know? I mean, you see me dealing with Maxar, right? It's a little bit of a different, because it's less established. This is an established company. It's almost more. I'm almost more intrigued by Maxar because it's difficult to value and nobody knows what the hell is going on. I know that sounds weird, but what's the market cap on Maxar? 1.5 billion. Shit, that's bigger than I thought. This one's not that much bigger. Jeez. Yeah, okay. So this is not a bad thing, but we picked up on it, huh? How many shares did they buy? Does it say? Only 4 million. Wow. Well, Klarman wouldn't be wasting his time if there weren't legitimate value there. So that right there is enough. That's like, well, we know Burry got involved in Maxar too after the fact, but a little bit different. Wasn't but HHC, Howard Hughes with Ackman there, financing that company. That's what I mean. It's a bit of a backstop there. Like they have, they're sticking their necks out there, reputation-wise, to a degree. They're fine. I mean, they're as successful as they are because you have to be fine being wrong at times. It's fine, but still, to make such a large allocation of capital to these types of firms, that's you sticking your neck out there professionally. So it's a little bit of it minimizes the downside. It does, and that's what I mean with value investing. A big part of it is trying to minimize the downside, right? Keep it to a minimum, and then it's like, all right, well, then the upside just takes care of itself. And now I'm sure their balance sheet is quite a bit strong. We know how much debt they have. They just raised enough to pay off their debt, didn't they? Didn't we just see that they have 100? Where's that debt? Oh, I hate scrolling over. 143. They balance sheet flawless. I don't even need to pull up the balance sheet. I don't care. Oh, that's other liabilities. Thank you. Jeez, I'm an idiot. See that? I was going to say that doesn't make any sense. Look at this. Total debt. Look at this. 2 billion. 2 billion. That's better. That makes a lot more sense, by the way, huh? It's going to say, what the hell? Even still, so we talk about the other liabilities quadrupling. What'd these do? Oh, these only doubled, which is more in line with what we were seeing with revenue growth, doubled. Then it's less of a big deal. Equity growth kind of flatlined. But, oh, that's embarrassing, huh? I was going to say, what the hell? If you only get that much in debt, what do you need that equity financing for? It doesn't make any sense. This makes more sense. Trying to get them on some sure footing. I don't know what the breakdown is for the debt, like when it's due, the maturity schedule, so forth. But let's look it up. Shit. 3 billion. It's probably publicly traded. Yeah, let's see. It usually depends on the size of the company. Look at this. Boom. Trading at par, above par. Look at this. Trades at par, but look at what it's rated by the ratings agencies, you know? I trust Klarman over their ratings agencies. Let's see. It could be. Sometimes their hands, they force their own hands by having rules and stuff like that as to what the rating should be. I know this with GameStop. Yeah, CAA. It's like, if the rating is a reflection of the likelihood that you're going to get paid back, that's not a good rating. What, these are due 2021? See what I mean? So you start to pick up on how not accurate, but the likelihood that they're a reflection of opportunity or not. And who cares? Look at this. They trade at par. That's the price is more meaningful than the rating, perhaps, for someone like me. Anyway, Klarman's not getting involved in a company that has a weak balance sheet. It's a rule of thumb. If you're an individual investor trying to track so many companies, you need to rely on these rule of thumbs. That's what I mean. Maybe it would be educational for me to dig through financial statements and start picking stuff apart, but it's not how I work because I can't. I don't have the luxury of doing that. So I'm going to go back to this one. $2 billion in debt. But what's equity? Sorry. $2 billion in equity. 1-to-1. Just about 1-to-1. Not concerning. Not concerning. Forget the balance sheet concerns. And I like to see this historically well run. I'm seeing legitimate revenue growth. I'm seeing gross margin steady, keeping it together. Really, this is really good equity growth. I mean, it has doubled over the past, and paying a dividend. Oh, is my dividend field broken? I gotta fix that. Gotta fix a lot of stuff, huh? This is the second time I've seen. Shit. Are they paying a dividend? Let's see. Okay, doesn't look like it. So this straight equity growth, nice. I mean, it's taken a number of years, but it doubled. Growth has slowed, is what has happened, right? Equity growth. But look at that EBITDA growth. So this is just there's still solid revenue growth, solid EBITDA growth, solid operating cash flow growth. It's just a matter of clearly maybe they messed up. That's why the stock price sold off. It's as simple as that. I don't even need to know exactly how they messed up. You know what I mean? Look at it. Caught support. We're testing technical analysis. There you go. Look at this. It's support. We would have guessed that this roughly would have been in the area of support, and it is so far. What is this? 20? This is 20 years too. That's real support right there. Damn, we're at a near 10-year low. So that part of the issue is how much upside is here, though, right? How much upside is really here? But for putting some capital here, I think I'd park some capital here, right? Because downside seems minimal. This is getting added to. Add to VSAT. I've seen enough. I'm not recommending you add to VSAT. The Roaring Kitty model portfolio, which may not be a suitable strategy for yourself, right? But downside seems minimal. How low did it go? How low did it get? Look, it barely traded below tangible book. Sign of quality assets right there, or at least perceived quality. I mean, it's been so it bumped up. Interesting that it bumped up. We missed out on a little bit of an opportunity there. You still add here, but you might add more and pull back. I mean, just because it's such a small position, 0.2%. There we go. We don't need to ask that anymore. Add to VSAT. Solid company. Historically solid company. Same thing with that. That's why sometimes it's enough. It's just the downside seems minimum. So it's not going to be a big position in the portfolio. Maybe if I just want to park some cash there. What's the cash position? 8%. Could park some cash there. What do you think? That's what it is. So when you view cash as like a type of a position, you're just managing liquidity. In fact, I think Klarman might have said that. You're not really. That's all portfolio management is. It's just managing liquidity. What are you doing with your liquidity and where you're parking it and so forth. And sometimes you may take. And part of what I want to do too is like view cash as like I want to park cash in some solid. I mean, many people already do this, right? This isn't anything new. But park some of the cash in solid companies with relatively minimal downside. And just leave it there. And then when things look more compelling, then you just take the cash. Maybe it sold off a little bit, 10, 20%. It's no big deal because now you got like 5 baggers or something. You know what I mean? So it's not necessarily a bad thing if you're 100% exposed because maybe 30% of that is in higher quality companies that won't sell off much, right? Just general diversification stuff. But even on a security selection style where you're dealing with individual stocks and stuff like that, you may just park it in like 3 or 4 companies that are relatively high quality. And VSAT seems like it could be one of them. But I don't have that much cash. 8% isn't that much. But okay. Cool. Then how did we just get to that? Because we sorted by insider buying. See what I mean? That's why it's good to do that. Well, this will be more and more. I'm still trying to get in the flow of this. You know what I mean? But this is the type of stuff. We haven't even looked at other companies. We're looking at companies in the Roaring Kitty, but we spent an hour. We haven't even gone exploring. You don't have to. This is actually another benefit of having so many damn companies in the Roaring Kitty portfolio, because they're all here. You can just start here, where to add, and then usually one that you're going heavy into is already in the damn portfolio. So I spend a lot of time here sorting by these different variables, seeing which ones are looking compelling. Oh, I added a new one today. Why did I add it? Because I just happened to come across it in the Roaring Kitty portfolio. And let's see, because if we sort by percent from 52-week low, let's check this. Let's sort by 15. Maybe I'll come back to insider buying. I just want to look at TSC insider buying. Circ. Sorry, something just got DK. I had a very small position. I just trimmed that down to not much. Because look at that PBF right next to it, insider buying. The DK, that's got to be Carl Icahn. ASPS, who was that by? That's a fund buy in it. Is it green something or red? Oh, that looks bad, huh? Damn. I don't know if I trimmed it in time. Oh, that looks bad. Shit. I was telling you a lot of charts look like this though. They had a little bit of a pull up, not quite as much on the RSI. It was kind of trending down and then up, and then it didn't take out those highs. It would have been a good time to trim, but again, right as the stream was taken up. And I got to be more dialed into earnings too. I do. This is turning out to be a mistake. I actually thought it could get back up to here. That was part of it. I remember thinking about it. But so one chart looks bad out of a bunch. I mean, there's probably others, but this one looks especially bad. Bummer. Now it's pulled all the way back. It's like, what's the point? It was should have trimmed that. STKL. Okay. All right, now let me just sort by 52-week low from 52-week low. Oh, I want to do true though, because I consider it a. Yes, it's right. Okay, so this is what I was like. I was thinking in my head, is there any way I could sort this that this company would show up at near the top of the list? And I guess right. This was part of what caught my attention because I was surprised it pulled back recently. But I bought Western Digital. Western Digital was already in the portfolio. But look at that. Look at $11 billion company, right? I'm kind of parking cash. And I've invested in Western Digital multiple times, but I had seen like last year that Barry got involved too, and obviously that there's so much overlap with him over the past 12 months. But these stocks were, I consider them my own stocks, so he's dealing in my area, right? But Western Digital was one of them. I'm like, sick. He saw the same shit. Yes, it was. Of course, it's cheap at $30. Or I forget what price he got at. But anyway, I started below $40, and I'm like, what? Below $40 is cheap for Western Digital. But, there's been opportunities to buy below $30 over the past 10 years. But it's like beautifully cyclical. like this is great. So this is what I was buying. But I was buying across a whole bunch of stuff. And I didn't go super heavy into it because it didn't get as cheap as I wanted it to. And I thought, well, this is a double. They'll get it to $50, but I was seeing like triples and 4-baggers and 5-baggers, so it was hard to do. Same thing with tech. I think I was talking about tech last time too. It was difficult to go too heavy because it wasn't quite cheap enough, but cheap. And then then it's just bobbling around. But still, remember in April and May, shit was still cheap. There was still a lot of stuff out there, so it doesn't super compelling. But now a lot of things have risen quite a bit. Now Western Digital below 40, and it was breaking its trend a little bit. So I'm speculating. So it could be this chart looks bad, right? It could be, it just took out its low. Well, do we see support? Can we take out our magic? Can we take out our magic line drawing? Ooh, it kind of looks like support. Could be support. Do we draw? Technical analysis, huh? It could be support. We had support or support right there. If we do a thicker line, I would make the case that it's in the area, right? So it's not a totally bad chart. And same thing with ASPS, right? It's in the area. This could be the support. It's probably going to keep coming down. There's a case that I should trim it even right now. Bummer. But this, I think it looks okay because I know Western Digital to be a good company. And I know there's probably secular risks because of hard disk drives and so forth. But as I recall, they were trying to diversify their business quite a bit. And like they understood this was I was first getting involved in it. It was a really opportune time. As it turned out, I didn't realize how good of a time it was. Anyway, I looked at that, and it was higher lows and stuff, higher lows, then just in a box, and then sold off. And then, but let me just do the 20-year. I was buying, no, right here. It was below $20. And it was still generating, I remember it was generating a ton of cash. Super strong balance sheet. You know, I as I recall, it was because of secular risks at that time too. And here we are. It's still survived. Oh, did they pay a dividend? They didn't used to pay a dividend. They may now. Had quite a bit of success. Yeah, and then it crushed it. That was sick. But it's a good looking chart though, huh? Boom, boom. And I didn't know shit about technical analysis back then. And then it took off, and it was like, and then in 2013, value stocks were crushing it. That's why it's good to have some sense of market history. I know people talk about long-term history, but even recent history, what the market's been doing, why a stock rose. Value stocks were in favor in 2013. That's what you need to know. They crushed it. And so Western Digital was a value stock. But it's also a growth stock. That's why it was like kind of confusing to me, huh? And then come back down. You buy below 40, and then it goes back up. And then comes back down, and you buy below 40. And then this was when it caught my attention again. Did I catch this one? I didn't catch this one because I was in I could have gotten that one, but this was energy and materials time. They were way cheaper. I didn't mind missing this one. I was still annoyed by it, but I did get in this one, and I'm like, below $40, count it. And then I set up a buy trigger right below like $35, and I thought I missed it. And then it got triggered. I'm like, sick. Then it doubled again. I'm like, oh, this is great. So historically, it's been kind of trendy. Then you go back out. Now tell me if we're at support, huh? Easy, easy, easy. In theory. Look at this. Right there. Yeah, you can draw it wherever you want. You want it there? It's okay. You're in the vicinity. This is the beauty of value investment, right? I don't care. Maybe day traders and stuff, they have to care about I don't care. Look at this. Boom. Right there. See if there's anything. But obviously that's not the main thesis. It's funny. I'm doing a lot of technical analysis during the stream. Hopefully you can tell because I'm talking about the companies that I know that I know their fundamentals. And that's maybe it's helpful to pull up the fundamentals, so you don't just think I'm just looking at charts all day. Maybe you don't care. Hey, that's the thing. I still don't know. Maybe it's a good thing. I'm not so sure. I'm testing. Oh, do I have any updates? Well, let me just. What time we got? 8:14. Oh, I'm getting way sidetracked now, huh? Okay, while that's loading up, can I just check this? Honestly, I don't really care about the press release. I've seen enough. I don't know if I've seen enough to go super heavy, but I've seen enough. Oh, when are they gonna announce? Oh, they already did. Oh, right there. Wait, where is it? You just put you posted your rest of. Where is it? Why didn't you? Oh my! What is this? Because I'm in the news section. I just want to check the outlook. I'm not parsing the fundamentals right now. This is the thing. So when you just get in the position, just some quick analysis, get it on the books, and then if it starts to look more compelling, Klarman keeps buying. The chart looks good. Maybe the insiders start buying. Trying to think of any other, or an activist starts getting involved. There's like a handful of things that might get my attention, and if it doesn't happen, it might just fall off. But then I check in those daily moves and stuff. Oh, what they get it all? They got a really pretty quarterly earnings, huh? Jeez. Okay, 21. What's the outlook? Balance sheet. Strong balance sheet. We already know that. We know it would be great. Like what would be great right now is if they forecasted like free cash flow. If I saw here they forecasted free cash flow of like what's the $3 billion market cap of I don't know, just some amount of free cash flow such that because if they're forecasting free cash flow and I think and Klarman's taking his position and stuff, then maybe it just hasn't yet been reflected in the price. Sometimes these things just take time. If they just reported this and they're forecasting stuff with the bigger companies, sometimes it's not like you don't get like a CVGI where you're up 40%, even though I'm still not sure that's justified. But all right, but let's take a peek. Can you see that okay? I can zoom in. What am I looking for? Greater than. Okay, with COVID creates extraordinary macro uncertainty. Q1 fiscal year 2021 performance suggests a stronger financial outlook for us in the fiscal year than we perceived a quarter ago. Good news, with potential for meaningful adjusted EBITDA growth. So they're kind of, you're going to see adjusted EBITDA stuff in this type of an industry. It's all they have to go by. Oh, that's not true. They're not generating free cash flows, but some earnings. Very strong here with backlog. Okay, I don't know how that. I don't have a frame of reference for the backlog right now. Plus another $3 billion. Okay. We see attractive domestic. Okay. Greater than expected. A $400 million bond offering in the quarter. They got a bond offering too. Did they just refinance? To further in a subsequent 165 to reduce net leverage. We remain vigilant. Damn. All right, no specifics. That's okay. That's fine. No biggie. Okay, back to just Western Digital real quick. Did it pull up? Come on. Yes. Look at these numbers. Oh, huge sell. Okay, huge decline in the revenues. Catch my eye right off the bat. But what happened to tangible book? There was a huge acquisition, wasn't there? I forget which one it was. Doesn't matter. Oh, I know which one it was. Whatever. Wow, that's a big set. So 20 billion down to 16. But like, look at this. The history of very strong earnings. Remember when I was looking at it back then, it was like just crushing it. And now they've kind of struggled for 3 or 4 years here. Okay. So I haven't looked at this in a while. I kind of just know it to be a decently run company. You know what I mean? And I know it generates free cash flows. I know they have a shit ton of revenues. And then I saw that Bori got involved too. And then I'm like, all right, so it's probably the same story that I've been dealing in. And then the chart looks about the same old story. But so the earnings have struggled a bit, and coincidentally, same time following the acquisition, right? Like shit, was it a bad acquisition? And also, just because you have a bad acquisition isn't so much a bad thing in my eyes, because maybe that's why the opportunity has presented itself, right? But check out operating cash flow. Still, although that's a rough 12 months there, huh? This isn't the update. I assume they reported. We don't have the updated because this is April. You see that, but that's okay. So $2 in operating cash flow, simple free cash flow. Look at this, still just crushing it, just cranking it out. This was kind of like GameStop too, they were throwing off that free cash flow. Both of these companies were on the same time I was getting involved in back in the day. And but even right now, simple free cash flow positive. I mean, I don't know why that's not as big a deal for a company like this because it's a bigger company. It's not really a bankruptcy risk. But net cash flow, $2, $3, okay. All right, so they're definitely struggling right now. So that's part of this reason for the sell-off. So I would need to investigate, just make sure everything's hanging in there okay. But I would say not as compelling as it looked. Remember, it was trading at like sub $20. This is what I was seeing back in the day. I was seeing like this earnings growth with the balance sheet that it had. It had no debt. No debt. There was no debt. Stronger and good. Like it was ridiculous trading below $20. But here we are now trading below $40. Earnings aren't quite there. But the free cash flow, it's a cyclical business. It's a cyclical industry. It may just be the industry's struggling right now. I don't know off the top of my head. Maybe I should. But still some solid free cash flow. In the acquisition, although it might have been again, I don't know. I could just do a quick search, right? What was it, 2017? Oh, I know which one it was. Toshiba. It was Toshiba. Now it's a true duopoly, isn't it? I think it's Seagate and Western Digital. It was Toshiba and there was a fourth one too that there was a consolidating. And now that's what I mean. And they're well aware of the SSD risks. As I recall, they were back in the day. That's why that trading below $20 didn't make sense. I'm certain they still are, and I believe they've also made acquisitions along the way, even though I forget off the top of my head. But it's not like it's not lost on them where the storage industries. I just bought a Western Digital hard drive this past week. I needed extra storage space for the videos that I've been editing. I also needed to add more RAM to the computer too. The Final Cut stuff. Oh, I got some new videos I'm working. It's taking me time because I need to learn Final Cut. Sorry, I'm going off in tangent. It's taken me some time to learn Final Cut. I had been just using the basic iMovie stuff, and then I'm like, all right, let me try to learn some new tools here. So it's taken me a couple weeks just to learn Final Cut, but I'm starting to get the hang of it, and I I might do another GameStop video first just because I'm so dialed into the company, but I'm using it as practice so that when I start rolling out these videos for other companies, like some of the companies who are tracking here, like we're doing good analysis here. Like it would be helpful to turn this analysis into, because who's gonna watch a 3-hour stream right now? Who's gonna tune into a 3-hour stream? Us. This is it. But who's gonna watch the stream? Very few people, right? But this is good analysis to share. So it makes sense to, if I can become efficient at making the video, turn this into, we can look at our notes and turn it into a quick video, just a couple minutes, roll it out. So I'm starting with GameStop as practice. And then, but again, this next one's just taking me, it's not going to be a long video. It's going to be a short video. That's why it's taking me so long, trying to boil everything down, trying to consolidate everything. But, and then following that, I can turn some of this analysis into a quick video. I need to be efficient about it. I need it to be fast because otherwise it will just take forever. So like Western Digital would be a good one to do a kitty corner is what I was calling it. So I could turn that into a video. And as part of that, we could do the research to dig into why the company is struggling right now. Is it just cyclical headwinds, also secular headwinds potentially as well. And then we can just talk about that stuff. You can get these, I'm convinced you can get these thesis down for many of the types of companies that I deal in down to 2 to 3 minutes. Like I'm trying to hold myself to that, and that's kind of what's taken me a while to make these videos, because I need to, like in some cases, I want to share data. Like we talk about free cash flow, or take GameStop, for example. You want to share the short interest, or who's invested in it, or where the bonds are trading, that they did a refund. Like you want to have all that data on screen, right? But at the same time, you need to talk through the thesis. And so it's difficult to get it all into boiled down, but it's possible. I know it's possible. So that's what I want to work on. And my style isn't for everybody, as I've talked about so many times. But for those people who do have a similar style, I feel like the videos would be helpful, because I would like those videos, because they go, oh shit, I didn't know Klarman just bought $175 million versus of VSAT. Now I know. But like, all right, now that's for some people that may be enough. For me, it is not for other people, but for me, it is. So like it would be great if someone would roll that out, so we could do it, you know. So, but Western Digital will be up there. All those top roaring kitty positions, all those positions in the portfolio could be videos. And then that way, if you're curious, we don't have to spend as much time during the stream, like going through Western Digital, going through all this stuff. You can just check the video, and that's the latest analysis right there. So we'll get there. Okay, Western Digital, yeah, this still looks okay to me. This is, I have to say, this is a little bit concerning here on the earnings front. In the now they have negative tangible book. That too. That's the thing. So an acquisition like that, even if earnings are struggling right now, as long as cash flow is holding together, but if it's a duopoly right now, that's what it is. I remember them kind of working in that direction. When you only have so many players in the industry, I mean, I don't know the regulatory bodies. I don't know the extent of that. But if they exist and there's really only a handful of players, even if the acquisition kind of sucks for a couple of years or it hampers operations, looking out 5 years, 10 years, it could be hugely bullish. You know what I mean? So that's just one thing to say nothing about what the regulatory bodies think about it. I don't know, but I'm just saying, if you only have two companies and they're crushing it in the industry there, then it's bullish. So that's the thing. Like I have to just double check, make sure there's only a couple of them there. But and if that's the case, I'm less concerned. Is that messed up to say I'm less concerned about this crappy performance, because they could be long-term beneficiaries of the more consolidated industry? Yeah. But cash flow's still there. Okay. Add to WDC. Oh, so that's what I said. I added today, but that was based. I didn't even pull up the fundamentals. That's how I've been I've historically been dialed into Western Digital. I didn't even pull up the fundamentals today. I was able to just add based on what I know about the company. That's why it's so important to track this stuff over time and practice and get involved in the companies and stuff, because it sticks with you. And then when you come across and you're looking at, you see the chart, you see Western Digital hit your daily list if it was down or it was up, or a 52-week low, or someone buys into it in the insiders and stuff. Then you're ready to go. So I didn't see anything here that it's alarming to me, but I do have to follow up. Questionable. Nah, I don't want to say questionable acquisition. Follow up on acquisition. What year was that? Oh, I did get it right. 2017. Toshiba, we thought. And relatively poor recent performance. Boom. And so what did I say? $11 billion. That's why I'm so hesitant to say that I'm a small cap investor, even though that's tends to be what I'm focusing on, because value's value, right? VSAT, Western Digital, value's value. I don't know what to say. Okay. Okay, that was a good little tangent. 8:30. Damn. Oh yeah. Nordstrom. Nordstrom looks interesting too. It seems to be one of the better brick and mortar retailers out there. But I got a lot of retail exposure too, and then GameStop, right? I mean, that's eating up a lot of that retail exposure. If you want to classify it as that, I feel like it's a retailer, brick and mortar retailer, just a little bit different because of the whole gaming angle. What we sorted by percent for 52-week low. So yeah, so this is kind of good too. I'm not. Well, maybe I'll keep this here. You know what I'd like to do right now though? I did say we were maybe going to look at the charts. But before we do that, can we do insider buying? Because the past damn 3 streams, I just wanted to look at some damn insider buying. Just screen this way, so I have it in the spreadsheet, right? In fact, I'm sorry. Let's start with the spreadsheet just quickly, because that's only going to have 1 week in there. But you remember this tab, I pulled in. Look, so there's been a lot of action. This is part of the reason I wanted to do this. I've seen a lot of companies on Open Insider that I'm following. I'm like, oh, shit. Okay. There's some buying there, some buying there. So here, right off the bat, I'm not focusing too much on the red. Those are the financials. Xerox. Oh, isn't this Carl Icahn? I saw this one. Yes, 30 million. Okay. Oh, so he already had a good chunk, right? Oh, maybe he didn't have 5% though, because if this is his first Open Insider filing. Oh, look, there was a director buy too. This is what caught my. There's a handful of them. I'm going to get to them, but let's pop up Xerox real quick. Xerox looked really compelling about 8 years ago. Right here, same thing. It was the same, very similar. A lot of stuff was looking cheap back then. Like people were forecasting double dip recession and all that stuff coming out of the financial crisis and stuff, and people kind of were really they were really bearish right around here, and then everything corrected, and then Xerox. Oh wait, is this what I was thinking of? No, I'm sorry. I wasn't thinking of Xerox. That's not what I was thinking of. I was thinking of remember Lexmark? Is that still public? I don't think it's public anymore, is it? Yeah. I was thinking of Lexmark right there. My apologies. But still, it's the same story here. See what I mean? It's the same story. All these damn stocks. Oh, it did it tripled all the way. Wow. Okay, so Carl Icahn getting involved right here is interesting, right? Check the test and technical analysis. Here we go. Let's test it. All right, so it busted through this though. That it could be a good thing because it's saying it's really cheap. Was this monthly? Shit. Yeah, monthly. Okay. Can we do weekly? I mean, monthly matter. Monthly's arguably more meaningful, right? And it's down on monthly. Let's check weekly real quick. All right, so there's a 5-year cheap on that. Oh, oh, did I miss it by a day? When did he buy? I didn't miss it, right? August 5th. Oh, did they just report? Was he buying before earnings? Sorry. What price did he buy? 16.31. We didn't miss shit, but still, it was up. Damn. Wait a second. What's going on? Oh, this is weekly. Durr. Weekly. We still missed it a little bit. Did they just report? Is that why they're up? Because he bought a couple days ago. Damn. Well, let's check the fundamentals, right? But sometimes this is enough. You see it on the dip, and I'm not as familiar with Xerox off the top of my head like I am with Western Digital or I didn't buy VSAT yet. We just dug into it. But what was the other one I bought in? I guess Tenneco. Tenneco was one that Carl's involved with too. I guess I do have it. Well, we'll see if I would buy this one. I don't know. Do you see Xerox on here? There it is. Oh no, it's the third one. We might have to wait for that to open. Let me close out of some opportunity to close stuff and grab a drink. All right, while that's doing, what were we checking on? Xerox, does it got any bonds? Why not? Par. All right, which one? This one's already closed. They're trading at par. All right, so right off the bat, you know what I mean? You talk about balance sheets quick. This is quick too. Maybe this could be my starting point. Oh, conduit. Oh, that was the other one I bought. Oh, I already mentioned that. CDNT. Oh, is it a spinoff? I don't even know. Oh, is that why? Oh, geez. So I bought it, like I said, super small position just to get it in the portfolio, thinking, all right, I'll dig deeper down, or maybe if it pulls back or something. But is it related to Xerox? That makes a lot of sense, right? Oh, now we got to look at this. Conduent, Xerox. What is it? Oh, is there no... Wait, following the separation of Xerox into two companies. Okay. You think I would have known that? I'm surprised I didn't know that. Because I feel like October 2016, I was still dialed into these types of things. I've kind of lost track. That's the thing, Xerox, because I don't think I had ever invested in Xerox. If I had invested, maybe, but I'm surprised I forgot that. Okay, what are the two companies? The new business process service, Conduent, the new business process services company will trade on the NEO. Can you see that okay? Sometimes you can. They say that you're trying to extract value by breaking into two companies. That's a real thing because sometimes it gets difficult to value the company when it's all mixed. And if there's two bona fide separate businesses in there, it can make sense to separate them and unlock value. That's what they say. Okay. And so we picked up on that though, huh? See, you can kind of you can cross reference some of these things and then learn more about them just by looking all over the place. Do I got Xerox here? All right, so we know this is a little bit of a different bit. So you see this huge sell-off, right? We would have picked up on this. If we just opened up the fundamentals here, we would have, this would have made sense because this is too big of a drop-off so suddenly. I mean, it can happen, but I would have figured that I would have went down. Does it show up as a sale or an acquisition if I go down? Nah, not really. Not that it should, because a separation like that you wouldn't handle on the cash flow statement like that. But anyway, this is sticks out as such a big drop off. But regardless, so let's just look for the past couple of years just to try to get a feel for Xerox. Okay, positive tangible book. They've been growing the past couple of years. What's the biz? I mean, is there an updated business in here now? Right here. That develops. This is nice up here, huh? You can see me going to check the profiles so frequently on a company, and I'm like, I just need it in here so I don't have to keep clicking around. Develops and sells document management systems and solutions worldwide. It offers intelligent workplace, including managed print services, digitization services, solutions that leverage workflow automation. All right. Look at the revenue declines though, huh? Gross margin holding up okay, not terrible. Remember, if revenues are collapsing and you can't get a control of gross margin, that's concerning. They pay a dividend, a $1 dividend. I don't usually deal in too many dividend players. Wow, $5 in earnings over the past 12 months? What the hell? What's that about? This is updated. Something funky on the income statement, like a gain or something. Non-operating gain. Look at the okay, so it's positive cash flow, but why is that red? Is it because it's well below the historical average, because of the split. But pretty solid operating cash flow past 5 years, roughly, since what's the average? $3? What's the price? 17? It's not free cash flow. I get that. Ooh, even free cash flow is not bad. $3? A simple free cash flow, right? Simple free cash flow, here you go. Oh, this is good. I moved this over. I should just keep this like this, huh? So you can see that. Here's simple free cash flow again. Just operating cash flow less CapEx. And on that front, $3 per share. And that's with an adjusted share count because it says it's levered. Okay. Interesting. Wow. How about net cash flow? Yeah. Okay. So a lot of net cash flow here. 14. What's this? It's something funky going. Look at $14 in net cash flow. it's getting messed up by something in the investing section of the cash flow statement, right? There's no way the operation traded $14 per share in net cash flow. Yeah, that's just the timing of stuff usually. Interesting. All right, looks interesting. But this revenue decline. Oh wow. The bonds are holding up. The bonds are holding up decently well. Did we say they're all at around par? I don't mind. Like there's a slight discount. That's for 2035. Come on. Who cares? That this is. I don't want to. It's not meaningless, right? But it matters. It doesn't matter very much to me. Look at now, 15 years. You traded a slight. That's actually really positive. Excuse me. I'm not usually often looking at companies that have bonds that are maturing 15 years in the future. Usually nobody would lend to those companies for that long unless it's at some obscene interest rate, right? So props to Xerox. So this right here is speaking to the balance sheet, though. The quality of the balance sheet. That's a nice little shortcut. Usually I check it after. Sometimes I check it before. But it's messy. This is messy, right? I mean, this isn't a clean, like VSAT. VSAT was kind of clean. Yeah, that equity growth was so good. It's I would argue pretty safely worth 1.5, 2 times book, which will put it at what, like $60 or something, $50, $60 in that area. Maybe, but if it continues to grow, $80 here, it's a little bit difficult. First of all, we don't even have tangible book to go off of. We have book if it's accurate, but assume the goodwill is going to get written down, right? Why wouldn't you assume that? Especially Xerox. I mean, how long? You see this revenue growth? How do they still have goodwill in the books? You know what I mean? You'd have revenue declines of this. It's not crazy decline. Hell, it's not as big of a decline as GameStop. But that's a different type of a business, right? But still, maybe they did have goodwill write-downs, right? No, because they got earnings. They're positive earnings past 3 years. Vote of confidence from Carl, huh? 30 million? How big of a position is it in his portfolio? I think I might have looked this up. What do you think? I was pretty surprised by VSAT. It's his fourth largest position? Shit. I made that note, I think, right? Yeah. All right, so we know is he by himself in Xerox? Anyone else? AQR. But that's but they go in a ton. That's Cliff. Wait, his position number 91. All right, but then let's check Carl. I don't think it's a big position. I may have looked at this when I saw the insider buying gets my attention. Here we go. Oh, shit. It ain't small. 2.5% of the reported portfolio? Damn. That's about half as big as of Herbalife. Wow. It's, right? And it's, was it 2/3 of Cheniere? How do you pronounce it? Cheniere, LNG. This one, I don't even know how to pronounce that thing. Newell, yeah, Newell or Newell. That one looked interesting. I saw. Was it him and his son buying into it? Remember that? I want to say it was his son, Brett Icahn. Yeah, I think it's his son. They were both buying into it. I still looked at. Oh, they bought. Look at that timing. Props. Carl Icahn's son. Props. Oh, wow. I looked at that at the time, too. There was a lot going on, but I was eagle-eyeing the insider buying at that time, right? What's moving? And I looked into it. Oh, on the ball. Nice work. What's it at right now? Sorry. It didn't look super cheap to me. That was the only thing. Nice job. Oh, it was even a tad. No, he wasn't that early. He was on. Maybe a tad. Plus, they had a position before this. Oh, plus 42%. No, so they were good job. Not up that much, but still just to have the foresight to be averaging into anything that you might have at that time. How's this chart looking? All right, we're getting off on a tangent, right? Get back to Xerox. Because as I recall, how big is this market cap? 7 billion? Nah. Might be something there, but I looked. It wasn't super compelling, whatever it was. I needed it. It wasn't as cheap as other shit I was seeing. So, okay. What the hell was I talking about? Oh, this. Oh, that's a good sized position. Oh, I own Cloudera's in the portfolio, CLDR. In Navistar, there was some overlap there. In another ONFCX, I get a lot of overlap with Carl, I guess. These are small, I mean, not big positions, but definitely some overlap there. I talked about Navistar. I forgot he owned it. And I told you, we talked about VSAT with Klarman and stuff and conviction there. But Camping World, that's Abrams. I believe he worked at Baupost too, if I recall correctly. They know their shit there. Anyway, but someone who used to team up with, was it Carl Icahn? Someone who used to team up with Icahn was also invested in Navistar too. What's his name? Oh, we'll find his name. Because I bring this up because he's also in MHR Fund. This guy, he's also in. Is it? Oh, I think he's in TWI. TWI. Oh, that's it. Sorry, I was thinking CVGI. I keep mixing those two up. But he's. So sometimes these people will leave their firm, but you know they were at a good firm, or you know their background, and so you know they kind of know their shit. All right, so okay, is this worth a dabble right off the bat? I don't know. It's not that cheap. This might be more. I need to know the story. You know what I mean? So debt per share has been declining. So that's good news, right? Can I just pull over debt per share? All right, so they've been paying off debt. They've paid off 20% of it. Past couple of years. Oh, $4 billion in debt. Doesn't that just sound like a lot? For what appears to be a declining business, it just seems like a lot of debt. It's priced pretty richly. Ugh. What do we say? Gross margin's holding up okay. This is tough. It's tough to get a feel for it when the numbers are kind of all over the place. Looks interesting. $5 in earnings, right? You know, you see what I'm seeing? Like $5 in earnings versus $17 share price. Yeah, can you forecast that into the future? I don't know. But the cash flow, maybe worth a dabble. What's this chart? One more peek at this chart. Shit. It was right there before all this hit. That would be a double. It's weird that it would sell off like this, right? Oh, their business is getting hit. That's why. Interesting. The business is getting... I must be getting hit because of COVID, right? Interesting. I wouldn't have thought that right off the bat, right? But yeah, I mean, it's a B2B. Okay, this actually looks... Yeah, it may be worth a quick dabble. Maybe. Not super cheap, but this might be one of those kind of like the other one. If you get it in the portfolio, maybe. Xerox? This is a question mark. Xerox? Icon. Top 10 position. And what was the name of the other ticker? I don't even remember the damn ticker. CNDT. That's important to note. And he was buying both, right? Did I get the right ticker? Yeah, whatever. Okay. All right, back to the insider buying. Let's see what we got. Okay, Axis. Now, GPRE. So this one is an ethanol producer where the input is corn. They produce a biodiesel. Diesel firm where corn is the input, right? And they're turning it into fuel and stuff like this. I've owned this in the past. And what you want to do is you want to take a peek at corn. But he did a good job. It was the CEO who's buying. If we just pulled it, how much are they buying? $600K, right? Yeah, it's a good chunk of change. Todd Becker, he's been with the company since I was dealing in it back in. Oh, they had some back then too. Todd Becker. But if you look at, get rid of the sales for just a moment. Oh, it doesn't go back that far? Oh, it's only 4 years. Oh, I should update that. By default, I should have all years. We pull this up. He was buying it back in 2012 too. And then someone else got involved. But if you check this chart, crushed it. Crushed it. It was it a 10 bagger? Yeah, 10 bagger. 10 bagger. I didn't get it though. I didn't get the 10 bagger. I got a, look at that, huh? I mean, I think it was traded on narrative. I don't think it was worth this much. I think it was worth closer to like 15 and 25, if I recall. But 10 bagger, jeez, he nailed it. And then he probably was selling on the way up, I assume. Oh, wow, this is, did he get down there? Oh, no. Oh, I didn't have that in the portfolio. Look at this. Damn. Oh. Oh. That's a missed opportunity. Because that, like I say, if you're dialed into the company, why is it? It's in my on deck portfolio. Did you see that? Damn. Did I think it was gonna go? Wow. Okay, so it's already triple, going on a quadruple. He's still buying right now. That's interesting. Kind of missed the boat in the lows, but you got to give some. I don't even know if they could pull the trigger. Some of them at this time. Look at the technical analysis, huh? Right there. Damn, nice run up. I don't know about the value of that though. We might be like below $7-8. That, as I recall, that was cheap. But $15, I'm not so sure that's cheap. We'll pull it up. Okay, but CEO 200K. Well, I mean, when we're at 600K total. Oh, we're not. Oh, 400K. Oh, what? I thought I saw 600K. So that's not bad. Like that's. And then let's look at corn prices, right? You got to look at corn. I don't know if I have corn saved. What if I do? Nice. Oh. This is bullish for GPRE, right? So watch. Look at. So this is. Notice what. Let's see what GPRE did in mid 2019. Look at that. You can time it. You can time it to corn. It got its ass kicked. See that? Wait, sorry. Let me just do, what's this, GPRE? Do 3 years, do 3 weekly. And then do this 3 weekly. Yeah, it's same exact time. I know I can kind of do these at the same time. Look at that. Almost the same damn drawdown. And it's because corn is the input. So if corn prices go up, your costs go up and your margins get whacked and you're not going to make as much money. And it doesn't even matter that it was brief. It was brief. It was a quarter. Is there 2 quarters? A couple quarters. It was brief. And it doesn't matter because the market forecasted, just forecasted into the future, whatever's happening right now, right? They got, what is it? ED, extrapolation dysfunction. So yeah, then it bounced right back up though. So it kind of just followed corn right to it. Damn, right on the money. It kind of was. It was it head corn on the up. It kind of picked up on that things were slowing down. Yeah. And then by the time September rolled around, anyway, now you see corn in the gutter right now, right? That's kind of bullish for GPR. That's why it's already up, 4x or something like that. Ah, damn, internet. Not receiving enough video. I got all these spreadsheets open too. That's not helping in things. Yeah, let me close. If I close one, maybe that will help. And we'll see if that helps. I got other spreadsheets too. Now I got 3 of the fundamentals open. I should close one of those. I don't know. Yeah, I can close this one because I'm not going to be opening those up. Oh, is it spinning right now? Oh, that's slow. Let's see if I can fix it by closing spreadsheets. Bummer. What a drag. Damn. Okay. Well, I'll just keep talking. If it's super slow, just give a holler. Then I'll definitely, let me close one more. See if that helps. I upgraded my internet to try to keep it super fast. So I don't know what the deal with that is. That's a drag though. Same thing when the spreadsheets aren't working. Like you need the stream to be working smoothly so it's fast and stuff, right? Because I mean it's already a 3-hour stream. You can't have it drag on any longer. And then you can't have the spreadsheets be breaking, right? Those are 2 things where I'm like, I did my best to keep them quick and keep them zippy. And then same thing with the internet. I'm like, max out my internet with the faster router and modem and so forth. We'll see. Sometimes it just clears itself out too. But so GPRE, so that's a drag. But corn, this is the question is there, has it already been adequately reflected in the stock price? This corn beat in the gutter. Wow, really cheap, huh? Really cheap. Support though, huh? Right at support. It's a good time to be buying GPRE. I should have been more dialed in, huh? If you see corn down at those prices right back in March, damn. Oh, it needs to be added to the tracker, by the way. I add to the watch list. You know which one I did have though? Was this company, REGI. This is actually a quick. This is a big, not a big win for me. Oh, it's at 37. I bought it. I got lucky on this. Is straight lucky timing. Bought it right here. I bought it in August. I bought it at like $10. And talk about a quick. I got a quick. What, I got a triple? I think I got a triple on it. Yeah, because I saw this. I saw this run up, and I sold right in this area here. And then you know what was happening too? The insiders were buying. I recall. I believe they were buying in December. Check this. Did I get it? They were not. They were buying in March. See, I remember them buying in March. Okay. Why didn't I buy GPRE? I don't have a reason. Damn. Anyway, I didn't buy on the pullback because I didn't think it got cheap enough. And now here it is. It's already doubled. That's cool. Damn, GPRE is a miss. Do I have it in the fundamentals? Let's check it. So you see this rapid. Oh, it wasn't rapid in those early days, rapid revenue growth, but then it kind of stabilized. Wow, 3 billion, 2 billion. See what I mean? It's volatile revenues, right? Volatile industry. 3.5, but then you get the tax credits and all that stuff. I mean, there's some regulatory stuff you need to take into consideration. But I remember part of my REGI thesis was that they were going to get renewed at the end of December, I think. Or it was like not a foregone conclusion, but it was highly speculated that it was going to happen. And then it did, and then it gets backdated and stuff. And so it was like a sunset provision that was ending, I think, at the end of last year. And then they renewed it, and then I think that was the news for it was like renewed this week. And then it was, although, do you see the same jump in GPRE? No? Interesting. Maybe it was a little bit of a different company then? I kind of forget. Or maybe they got the benefit. I don't know. I should know that. But, okay. Oh, let me pull up those fundamentals again. Wow. They did a decent job growing their equity. Okay. And they're not as levered as they were. Remember, I was buying, they do a stock split. They do a stock split? Has it always been that, was it trading that cheaply? They had tangible book value of $12. That's what I mean. Whatever the thesis was back in the day, they had, I was traded like $3 or $4 or something. No, was it trading that cheaply? See what I mean? Shit. It's trading at $4. Talking about basic value and value investing 101. You're trading at $4 per share. You get $14 or $12 in book value. Come on, 1/3 of book value. Historically profitable. 4 years prior of profitability. And they had a little bit of leverage to consider, right? That's why credit analysis is such a big part of the analysis, right? But come on, this is so simple. This is what I'm talking about. You need 2 minutes, 3 minutes to make the video. Boom, you're done. Buy the stock, and then you just sit on it and add and trim accordingly, and blah blah blah. Now we're not quite as cheap, right? Throwing off a loss this year. Wow, $3 per share. Yikes. It's probably a cash loss. Yeah, I mean, they had a little bit of book value. Oh, how'd they get goodwill on the books? How are you going to be a commodity producer and you have goodwill? I mean, acquisition, right? They acquired a company. But I just mean, usually, it's already been written off. When was the Where the hell is it? Oh, right there. This column. This row right there. Oh, you can't see. Net acquisitions per share. That's I got a definition there. Good. Net cash flow related to acquisitions and divestitures. That's just the metric that they have. So there you go. They spent $15 per share worth. So what's that? 600 million. I see 40 million shares, something like that. And then I assume that's when the goodwill popped in, roughly, because you see book value and tangible book were about they had a little bit, and then it's all written off. It's all sold off. Yeah, you can assume it. It's a commodity producer too. Write it off. Assume it's zero. What's the point? But see the earnings. But yeah, some losses here. This was the opportunity. Oh, I'm kind of too bad about that March. Again, lots of positions in the portfolio went up significantly. It's not that it's just a little bit more frustrating when it's a position, especially when it's a company I've invested in the past and I was dialed into it in the past, and it kind of just fell off the radar just a little bit. So many moving parts. It's fine. I say that. I feel like I've been saying that a lot lately, but now you see it up 3-4x, and it was just like just a standard buy. But so book value, so it still trades below book value. Boom, number one. And financial statement, I see it's my simple calculator here, whatever the hell it's doing, is saying it's levered. The cash flow, it looks like it's the cash flow is a big reason. It's Z double prime score. It's not bad, but it's got negative operating cash flow past 3 years. So this, remember what I talked about. No matter what's going on, it's always good to see positive operating cash flow, because you start seeing negative operating cash, you're like, oh boy, are you burning cash? Are your operations burning cash? Like, how long can you sustain that for? So even if you have earnings losses, or if you have revenue declines, and I mean those things, I'm not saying they don't matter, but I just mean keep that positive operating cash flow. And so anyway, now you get a volatile business, a volatile industry. They have a history of generating profit, so they have the occasional loss here, but it's a big loss. But these were operating cash flows too. Shit, I was gonna say part of the earnings loss is due to the goodwill write down, right? The impairment, but it's not a phony business. They generated a historical operating cash flow, but right now it's a little bit. But now they've bounced back. Maybe 2018 was the trough there, and then and now it's bounced back. It's turning around potentially. Just thinking out loud here. And then revenue's still taking some time. Sorry, I'm scrolling. I don't like when I do that because it throws me off. Oh, this dividend. I got this dividend row. So it just depends on the company. Oh, they're paying a dividend? Yeah, I kind of remember them doing that. They readied the ship, and then the stock price went up significantly. They're probably like, all right, let's start paying the dividend. That's probably the time to sell. As it turned out, it probably was the time to sell, right? Once they institute the dividend. I remember when who instituted a dividend? Was it GameStop, like way back in the day? And I remember, yeah, I think so. I think they hadn't paid, and they're like, we're going to pay a dividend, which turned out not to be. I mean, they just cut it. Now here, I've come full circle. Now they're cutting the dividend. Oh, I didn't think about that. I forgot that. Cool. But trades below book value, so still cheap on that metric. That metric alone, really. But cheap also on historical max. So I like to look at like 3-year max EPS, 3-year average, 3-year earnings max EPS, because that gives you some. Hey, it should be faster speed now. That yellow thing went away, because that's like a little bit of something to look forward to if things ever turned around. Yeah, I don't necessarily bet on it. It's just like, hey, what were their max 3-year average earnings in the past? Because and then I see with GPRE it was over $2. I think shit, okay. $2, and if they get that again, especially on the uptrend, because the market will overshoot, you might get a multiple of 10, 15 times that. So, but even that's not that cheap. You know what I mean? Relative to where the price is right now. That's what I mean. Oh, it doesn't look that cheap to me. Trades below book, but it's a commodity producer. So how cheap is that? And what's the value of those assets too? Especially if you're reliant on tax credits and stuff. It's precarious. It's not necessarily high quality. That said, if you can buy it at enough of a discount, then it's worthwhile. But $15, you definitely should add to. Okay, I already said that. It definitely needs to be added to the watch list, and definitely I'll keep my eye on it. I should have been keeping my eye on it, so we'll do that. But I don't even think this is like added to the portfolio. It needs to come back down, I think. Oh, this chart looks kind of good though, huh? Let's do some of these magical trend lines. What do you think? Breakout? Ooh, okay. Little, if we're reading the tea leaves here, is there a little something there? A little bit of a breakout? Shit, could be, huh? Plus you got corn in the gutter. Oof. I'd have to get the update on the tax, on whatever the hell the tax credits, whatever is going on there. Interesting. Plus, you'd think there'd be increased demand for biodiesel if energy prices rise, right? I mean, if oil prices are, I think that was part of the thesis too. If you expect energy prices to rise, oil prices to rise, then there's going to be increased demand for alternatives, right? Whatever those alternatives are. Solar, wind, biodiesel, you know what I mean? Just those types of things. I forget. I think that's the case. Like, that's the type of stuff I got to look up. I got to pop up and compare the charts. But always, that's always the thing. It's never the most important part of the thesis, and that's why it sounds silly if I don't know that off the top of my head. But what I'm focused on is the company trading at 25% a book and having cash on them. I'm like, all right, so that's the starting point, and then I just make sure the rest kind of makes sense. But that could be part of it too. We saw our energy getting bid up. Energy has been bid up. It was zero. It was zero. Now it's bounced back. But if I know some people are forecasting higher energy prices next year too, if there's supply concerns, which there eventually will be, right? Because of all the supply that got cut in the past 6 months with all that was going on, it takes a little bit of a while. I know that people say turn on the spigot of fracking and stuff, but I think it's going to take a while to bring all that back on. So you could just there might be a rise in oil. I'm not so sure. I mean, I have heavy energy exposure. You've seen that, right? But I'm not totally sold on it, but I could see it happening. And we're already back at 40, so I don't know. Maybe it's worth dabbling. A very small, but this is interesting to me. Plus, that's legitimate insider buying. It's no joke. All right, let's just make this list. Insider buying. What was it? It was like 500K about, just under. Okay, CEO, Eco. And then corn and gutter, right? Corn in the gutter. And then price below book, 75% a book. No one owns it, though. $3 billion in revenues. I'd make that note. And but max historical earnings about $2. $2. I'll discount a little bit, right? Margin of safety. I know it was like 240. I don't care. What was it? Was there something else? Was there something else that caught our attention? Oh, in the chart. Long-term breakout on the chart? Maybe. Do you know? I don't know. It's fun to talk about, though, right? See, everyone has an opinion on the chart because it's so easy, it's so quick and easy to analyze. Notice in this particular case, though, sometimes it's the first thing I'm looking at, right? In this case, it was the last thing I looked at, right? So I'm just trying not to lose my value investor card. Oh shit. Okay. Shit. Yeah, I don't know. I don't love the dividend, to be honest. Damn, it was a 10 bagger. I forgot that was a 10 bagger. Wow. It could be a 10 bagger again. Shit. Okay. Keep moving. Oh, shit. Well, we're getting through the insider buying today. Then everything else is getting tabled until we're in the swing of things here. All right, so I need to change that to on deck. I would do it now, but I know I was slowing the stream down. So I already said add to watch list. Okay. I'm not paying too much attention to the financials. Compass. I don't really care. I got to draw a line somewhere, right? I can't be looking at all this shit. Haynes International. Oh, what's this? So this, if I added this to the watch list, I did it in March when I was going through everything. Because that name I'm not too familiar with, but I was looking through everything, looking for new names, stuff that wasn't on my watch list. In these types of industries, like steel, obviously this shit was getting sold out, right? Look at this. Was it just at 37? And it didn't sell off that much. Probably why I didn't buy a position. Oh, we just missed this. Was it up 10%? 20%? Noise, right? Noise for the value investor. Shit. Oh, look at this. Yeah, it doesn't look that compelling to me on the chart, right? But is there anything, let's look across. How much insider buying? Oh, that's not much. 70, I missed that though. 70 grand? That's nothing. I'm not digging in. Steel, I got plenty of, steel, these are all going to rise together. Value comes in favor. If commodities come in favor, steel's going in favor too. Whatever I saw, it didn't seem that compelling. 279 market cap. Here's where this stuff comes in handy a little bit, scrolling over. I'm looking at the metrics here. 430 in revenues. It's kind of small. That's held up pretty. That price is fairly steady for kind of a smaller company, right? EBITDA to EV, 40% of that. It's like everything else. All right, Phillips 66. Who was this? This wasn't Buffett. No, it's just nominal. So you see, I'm looking for the. Let's look for the bright green. Hey, what's this? Bridgewater? That's not Bridgewater. Associates, right? Oh yeah, what's this one? CC. I've looked at this one before. It's not on a watch list or anything. Oh shit. It's only a double. Is this? No, yeah, no. I've looked, and even though I can't remember, I didn't like it for my style. I have no idea what that even means. I don't even know, but I remember looking at that ticker, seeing the environmental and facility services, and I'm not going to waste my time right now. For better or worse. We'll go 10x. And I'll be like, oh man, I missed it. Okay. Pharmaceuticals, nah. UGI, what the hell? Gas utilities, nah. Nah, kid. NP, oh. Is that a paper product, right? Nah. I mean, I got RFP. I'm good there. And if I didn't add to the watch list, I was definitely looking at this. 825, that's an interesting market cap though, right? Yeah. I mean, you got to stick out. You have to have some characteristics that stick out right now. This, and relative to when I'm looking at these, and in my head, I'm thinking of the positions that I already have in the Roaring Kitty portfolio, right? And in any account, right? And when I think there's nothing that stands out with this a paper product type company at an $825 million market. I don't even see anything lighting up over here. It's not significant insider buying. It's like, if it's rising, other stuff will rise. All right, Pulse, Pfizer. Oh, what's Pfizer doing? Was it a big? Oh, yeah, it's a big. I mean, I'm not dealing. I have to draw a line somewhere. I say I deal in large companies. I'm talking about like 3 billion, 4 billion, 5 billion. Oh, the Western Digital. That might be my highest market cap. Oh, can I do that real quick if you'll allow me? Now you got me curious. If I sort by market cap for the companies in the portfolio, did I do this I think I did it in one of my videos that I uploaded. Let me do where is it? 7. Just real quick. Oh, here's my smallest one. Oh yeah, this is IO is a real speculative one, but I think it could go up a bit. Like, it's real messy. It's an energy company. FP is an interesting one. Oh, it's already doubled. I got in there about $1. That's an interesting small cap, micro cap one. Yeah, 41 million, but it's a potential growth one. It reminds me of like Aaron's, where what is it? You can like rent stuff online or something. I kind of forget, but it's only up $1. But I mean, it's a double. But everything stuff's up 3x. Okay, sorry. I want to do by the largest ones. Let's do false. Sorry, this is the thing. I don't always sort by this. So I'll sort. I'm like, oh yeah, what's going on here? IO is a speculative one, but could go up big. FET, let's less risky. Oh no, that's a risky one. They just did a bond exchange too that looked really interesting. I actually got in to FET. I had owned it back last year, and I sold out because I'm like, this thing's not gonna survive. And I got back in at 20 cents, and it was like a quick triple because of they tried to do that bond exchange. Sandridge looks interesting. I think Icon's in this one too. New Home. All right, so I have a handful of them below 100, and that's more than I thought. That's good. None of them look super compelling to me though. IO looks compelling as like an energy type play. Sandridge looks compelling. Maybe New Home. I could see that. I think book value for New Home was like $10-11. AFI, that one looked interesting too. Then I didn't know if they were going to survive. I thought they might have some liquidity issues. I think it's already doubled. But anything else? And then Flex Shopper. If this turns into like a growth, I could see this one. It was kind of in its infancy. I was kind of thinking about that it could turn into a growthy type company, but not so much the other ones. Maybe AFI. Anyway, and then we start getting into the hundreds. TWI. Okay, now let's do the largest ones. Get back to it. $9. All right, that's not the right market cap for BRFS, I don't think. Is it? Is it? Oh, it might be. It's a Brazilian firm. No, it's not. They get messed up on Google Finance messes up with certain markups. I created another spreadsheet to try to fix it, and it doesn't work consistently, so that sucks. But at least I know in my head if it's a foreign company. Okay. Oh, I still got Viacom in the Roaring Kitty portfolio. Okay, but I've been trimming it 0.35%. It was bigger. Yeah, because I think it's doubled. Okay, so that's on the big side. Then Western Digital. Oh, they had Carnival. That was just a play in the rebound, right? Sold off so much. I just saw it today. It's a double. I almost sold out, but then I'm like, keep it on there, because if things turn around and people things go back, I'm not guessing that things are going back fully to normal, blah blah blah. But I'm just saying, if they did, Carnival's probably still a double. I remember looking at the financials and thinking, all right, well, I mean, you see the chart and you can think double, but I even think it was historically it was like a decent business. You know what I mean? That's it has real risks right now. But I'm just saying, if things did go back to normal, it would double. So I decided not to. I didn't even trim anything. It's a small position, but. And then Western Digital I added today, so it was up there. So you know what I mean. So then you see the big jump down. That might be right for their market cap. It used to be wrong, but that might be right. I forget. All right, I actually have quite a bit of a big market cap. And if you recall, I don't remember when I've talked about this, but this was deliberate. I made a conscious decision. Back when everything was going on, to at least buy some larger cap companies, so that not everything I owned would go bankrupt. Because I mean, even if nothing else, the larger you are, the more likely you are. All else equal, the larger you are, the more likely you are to survive. Doesn't mean you're gonna survive. Blah blah blah. And I'm like, I don't want everything to go bankrupt. I need to get some exposure. And sometimes those bigger companies can be the ones that go up way more, because they can attract more capital because they're bigger by virtue of their size. But this is actually more than I. But these are all small. Let's add this up. Can I add this up real quick? Of everything above 3 billion, what's this? It's only 14% of the portfolio. Okay. All right. I was going to say that's a lot of positions, but they're all small. They're all small. OVV is the biggest one, and that's because it's up significantly. But everything else, all right. So 14%. All right, I'm cool with that. But everything else below 3. And can I keep going, actually? Can we keep testing this? How are they everything above 2? Oh, 23%. Okay. That sounds high to me. But that's because many of these are the big winners. RRC, they weren't always above 2, right? OVV was a big winner. Not all these are winners, though. Oh, Camping World, 10X, 10-bagger, right? 10-bagger. Whoa, so what is it right now? Whoa, so this is what I mean. 10-baggers, they throw you for a loop, right? The market cap right now, 2.8 billion. It was like 300 million. Isn't that crazy to think about? It's nuts. So, you know what I mean? OVV, Alcoa is already a double, so it would have fallen under. So it wasn't always 23%, but that's what it is now because they've grown. But anyway. All right, where the hell was I? Oh yeah, insider buying. Close some of this shit up. All right, Tenneco. So who was buying Tenneco? I did see this. Yeah, look at this, huh? Look at these trades. Trade date. Oh, this person's quick to file. Legit. This is legit insider buying. When did this happen? This just happened. I added to Tenneco before this happened. I had, I think if you remember, I think I got stop lost out of it, I think. I mean, I got stopped out. That's what they say, right? But I think I had I think that's what happened. But I was surprised I didn't have a position. I was like, what the hell? Because I've been in it so long, and so I missed the lows, the bottom. But I think it still looks cheap if the company can survive, if it successfully pulled it off. There's probably tremendous upside. Plus, Carl's still involved and stuff. And that's the thing, risky stock. And I don't know that they will work through all the shit that they're dealing with. There's a potential spinoff that they're working on and stuff, and that's been delayed. And then this happened. It was like a mess before this all happened. But the chart was looking good. I bought a whole bunch of stuff. I missed on some stuff because I wasn't super tracking everything like we're doing now. This is really good. But I did poke up a couple of charts of things of interest, and so I bought Tenneco. I'm like, oh shit, why don't I have it? And so I bought it right there. And then it sold off. I'm like, all right, back there. And then it jumped back up past 2 days. I'm like, what the hell's going on here? But now I see the insider buying, and now I think to me, I've long thought that it was cheap below $10. And then here it is getting down to friggin' below $3, right? I kind of missed that. Did I say missed opportunity on 10? I feel like I did I? I have it listed all over the place. I need a dedicated Evernote. What is it called? Evernote to missed opportunities. Maybe I should create a note card. Heck, you can do that. Yeah, I'll do that. I'll add one. Create note card. Create note for missed opportunities. Those are the ones you kind of learn a lot from. And the ones you're losers, right? Obviously. I mean, create note for missed opportunities and losers. Maybe a separate one for screw ups. You know. Those are burned in my head. I don't need a note for those ones. Those ones singed in my brain. You know what I mean? You know. But missed opportunities less so because I just missed them. Like they were not on my radar. So let's get back to this. All right, blue. Damn, this one's crushing it, huh? BXC. I still haven't trimmed. Oh, they bought more. Did they buy? That's right. I did see they bought a shit ton too, didn't they? 500K. Oh, wait a second. What's this? A purchase on August 5th and then a sale of the exact same amount. Were they purchasing the shares that they had sold as a result of the options exercise? That seems kind of weird, huh? You can do this. Open Insider's great. Let's see this. Acquisition. August 5th. Purchase was the one. What's the footnote say? These line items reflect a sequence. Oh, yeah, I'm blocking it. Let me flip. Philadelphia. There you go. Okay. These items reflect a sequence of transactions to move beneficial ownership of 25,000 shares of common stock of BXC from the reporting person's IRA and 4850 shares. I'm reading the bottom. I don't know if you can see it. I can zoom in. Who wants to read the footnote? Do you really want to read the footnote, though? You know what I mean? Oh, I can zoom up. What am I doing? Sorry about that. If I just do that. Held by the reporting individually into a granted trust established by reporting. All right, so they're just moving around. Into a grantor trust established by the reporting person for estate planning purposes. Nope, nothing. Okay, so there was nothing that happened. Glad we checked. Nothing. Noise. Good. Okay. So, I mean, that's actually good to know because as it's becoming a bigger position, right, sitting on big gains, I was going to continue. I saw they got my attention last year when they were buying into it. All right. So, but anyway, no real insider buying. Okay. So red, but still, wait, can I just see this chart? Because it's getting close to. Damn, it's holding up well after its bounce, right? Shit. Great chart. Shit. I had gone heavier. And then I wasn't sure if they were going to make it. Super leveraged. And then, yeah, it probably could have been a bigger. It's really difficult to value this one. That's the thing. If I struggle with the balance sheet there, if I struggle analyzing the balance sheet, it's hard for me to go heavy into it. That's the thing. Although Camping World didn't have, this one's more speculative because it's even the assets are more uncertain as to what they can actually generate for profits. And so I don't know. I don't know if this was a mistake. Maybe a tad heavier. I feel like right now it should be like a 2%, 3% position, and it's only 1.5. I've trimmed some though. But anyway, I still think it could get. You see where it used to trade at? It's traded above 40. I've seen some. I've seen some theses. That said it was worth even more than that, like $50, $60. I forget those. Anyway, I'm taking my time, dragging my feet. Many times that has helped me. Also, I'm just slow. But this looks good. This looks good. And now it's getting. Oh, is it hitting resistance? Should I be trimming right now? It never quite got overbought on the weekly. See the RSI? It's getting close. It might make sense to drop it down to 1% right now. Let's test this. Let's keep an eye on BXC, right? Let's see if this is resistant. Most times we're talking about support because that's usually what I'm buying, right? Oh. We can just drop. We can drop wherever we want. Who cares? That good? All right. I'd say it's. I don't see it's above there. You could do right there. I wouldn't do that. I'd say right there. Those candlesticks. Probably a good time to trim. Trim BXC. I don't know. See, well, toss them on the notepad when you're just chilling at night, drinking a beer. Then wake up, grab some coffee, and then be wide awake, and then start making decisions. You know what I mean? Okay. But noise on the inside are buying from Boeing. Is Party City gonna make it? I didn't buy them. They were the ones I thought Party City and are they gonna survive? Shit. Oh, it's gonna be a 10-bagger. Oh no. Let me check the insider buying on this. This guy's a value guy too. I didn't know. Did he buy? He bought it all. He just bought. Oh, this is why. Forgot why I'm looking at it. You know what I mean? He just bought. Whoa. So I was saying look at all this insider buying, late 2019. In the August, I saw the August buys. These are legitimate purchases. $500,000. Oh, excuse me. I'm going reverse. This is all August. Almost so 600, almost 700K. And then he went again after earnings. The next one, 230. Not quite as much though. And then the director got involved. And then Cliff, I forget. You know his story. I forget his story. He's invested in a couple of names that I've looked at. Home too. Home. Yep, that was the other one. Oh, is that gonna? That's not it. No. I'm happy for that guy. I choked. See what I mean? You remember this? Remember this one? Remember this note? In major sell-offs by more companies that could go bankrupt. Damn. Oh, I'm afraid to look at this one. Look at these. Look at this. They're already 10-baggers. That's what I mean. Those are the 10-baggers. The 10-baggers are the nastiest ones. You don't have to make it a large position. And as you know, I mean, did I get any 10-baggers from the low besides Camping World? As far as sizable positions, it was only Camping World because it would be hard to already have a 10-bagger on a company that wasn't super sketchy or on the verge of going bankruptcy. Although maybe these weren't. I mean, I don't even know how to say this guy's name. Clifford Sosin, whatever his name is. I'm pretty sure he's a value guy. Didn't I look him up? Fundamental Investment Group. High yield and distressed opportunities. Oh, that's his background. Nice job. As well as this firm, and a leading investment bank, best known for its advisory services with respect to companies. Oh, this is painful. Nice work, Cliff. See what I mean? This is fundamental investing right here, right? I know. I mean, maybe not. That's not what you'll read in the books, but like you have additional data to make decisions off of, not just the fundamentals, not just the financial statements. That's what everyone thinks. This is analysis. Oh, sorry, you can't even see this. Sorry. This is analysis right here. You know what I mean? And seeing this guy getting involved all along the way, and then COVID happens, and then it's not to say that he was definitely going to be right. As it turned out, he's sitting on 2 10-baggers. But look at his background. You know what I mean? Like you can analyze so much to analyze the insider buying and insider decisions and hedge fund decisions, and then you see this guy's background. I don't remember I definitely looked him up. I knew he was a value guy, although this doesn't scream value. Maybe I read it somewhere else. I must have seen it here. This is a value focus. Okay, there you go. Is a value focused investment manager, right? Now a lot of people say that and they're full of shit, right? It's just something you put on your website and you just Warren Buffett, blah blah blah, Warren Buffett. And most people they are full of shit. But then you see a guy like this, right, who's got this prominently displayed on his website, and I see that and I think, okay. But then you see the type of shit that he's dealing with. Like, you gotta I mean, you get professionally, you're sticking your neck out when you're dealing in companies like Ticker Home and Party City, because everyone else is looking at those. And unfortunately, in this case, myself included, I don't always do that. But in this case, I was thinking the same, that, oh, these might not survive. And then like, they had to close. These are retailers, right? Like, they're going to have to close the doors. And when I looked at a whole bunch of retailers, I'm like, oh, if there's going to be a handful of them that go bankrupt, these two could be it. But his involvement should have lifted that a bit, and usually it does. I do look at these things. I think there was just so many moving parts in March. How many times can I say that? But these are tough because I was tracking more so home, less so Party City, because maybe I had a really small position in Party City. Home I had a legitimate position in, and wrote it. I didn't write it all the way down. I don't remember. Damn. Props to this guy. Really nice job, because these are the types of stocks these are what I go for, and it's nice to see them work out. Damn. But you see his background, and that's his specialty. You think he's gonna mess up? He does mess up. I'm sure of it. But you at least need to place a bet. You need to place a bet on those. Small bet, size accordingly, right? That's risk management 101. But then you see he was buying it. Oh no, he was buying this one in March, which I did look into. Did he buy anything else? He did buy. Look at this. He bought on March 17th. Oh, I did see that too. It's not in the portfolio, is it? Look at me, hoping it's in the portfolio. I'm pretty sure it's not. Yeah, I have so many damn positions. I gotta search. What, are you kidding me? All right. Add two more. Add it to the list. Those are the worst ones. The ones that I was dialed into, and then what I should just do is just pull the trigger because of the guilt. You know what I mean? I mean, everyone's aware of their biases. You don't want to fall victim to it, and but those feel worse, right? The ones that you were tracking, and then you made a decision, and it goes work both ways. Sometimes you do pull the trigger, you be like, oh, what was I thinking? Of course this was gonna go bankrupt. I'll do that. You're gonna see me do that too. In this particular case, you just see me do the opposite. I play both sides. Missed ops, home, and I don't even want to look into the story. I will eventually. I can't do it now. I need to sleep on it, and then come back, and then I'll read like how did it unfold, because that will truly be educational for me. But and if I'm being honest, just seeing him buying in March like that, right when it was. I mean, as you know, it was really ugly that time, right? A lot of tremendous uncertainty at that time, and he was still pulling the trigger. Boom, value investor. This is how you know he's a value investor. What more proof do I need? And he crushed it. March 13th. And he waited January, February, March. Boom, March 13th, March 16th, 2 million, 1 million, 1 million. And then he's buying CDLX too. So I'm going to read the story, get a feel for the narrative, and I'm going to do that, and hopefully I can internalize it. But the rule of thumb I'm going to remember is that if you see a value guy going heavy into it, in the thick of it, and you see the background, see they get some expertise in it, that's a little bit of a vote of confidence. I'm not as familiar with him as I am with some other folks like Carl and Klarman. And we talk about Carl and Klarman and Einhorn on this sometimes, and Bari, of course, right? But sometimes there's small folks like this who are better value investors than me, and I take note of it, and then I'm happy to see it worked out, because these were tough decisions to make, and he stepped right into it. And this is what I mean. He's sticking his neck out. He bought Party, so small position in Party, then he just bought more in August. I'll kick myself less if it goes up more from here. It's not. As I recall, he was buying in around here. I did look. I thought it looked a little bit cheap here if it survives and everything like that. But with all that's going on, what's it gonna do? I don't know. There's something there to the. It's Party City Holdings. It's where you get all your costumes and stuff like that. Seems like that's. And sometimes you just buy it on the fly, right? And you're not gonna necessarily order it. Sometimes you order it, but it seems like a good like Michaels. Remember Michaels? We looked at MIK. Similar, where you think people might just pop in and buy their stuff. But it was the bankruptcy risk with that one. So you have to buy and again, I did buy companies that went bankrupt, but I just wish I bought more. That's all. Okay. Back to the insider buying. This one. Okay. But interesting. So that's what he was buying. Oh, can we add it now? I need to add both of these to. I'm gonna add them to the watch list now so I can remember. I took them. What happened was with March happened, right? March happened, and a lot of stuff you see here was like as it was going on, like I was doing it simultaneously because I needed a tool to. I'm like, damn, I need a tool that does this. I need a tool that does that, and so I was simultaneously building this stuff out, and what was in the portfolio and new stuff I was finding is what I was adding to this current watch list that you see, and because I had tuned out to tickers like home and PRTY and even GPRE to an extent. You saw it on the on deck, and so they kind of missed the boat. I just missed it like a month prior is when I wasn't dialed into it. So now I'll add it back, and now every time I see it, I can feel bad about it. No, just kidding. Oh shit. Okay, let's go to now. Let's see what was. Well, we're in the insider buying. Okay, so that's it for the week. But can we just quickly check what time we got? 9:30. Shit. Okay. All right, purchases. Let's just quickly go through. And if you're screening on Open Insider, here, I can move this over a little bit. This is good. Remember, you can use this is great for checking out the chart real quick. So look at this. You might say, just as an example, you pull up WPF. I see this chart. I keep moving. The hell? What I got? 3 weeks of data? That ain't for me. GPRE. We already looked into that one. Look at that chart. Beautiful. Okay, and then I wish I had this in the spreadsheet. This chart is. Obviously, I wish you could. I could, well, no, this is good enough. I don't even have to click anything. If you've seen my other videos, you know I don't like clicking. Expedia, nah, I think it's too big. But there was some stuff, I could have sworn there was more. Let me just see here, maybe before. Oh, Vapo. So Vapo, position in the company. They did the ventilators and stuff, and then it got whacked this week, right? That's why we looked into it. And now this company, Prescott, I've crossed paths with them a little bit, I think. Prescott? No, really? All right, let me check this. And now they're buying into it after the huge sell-off. So now I'm torn. I'm like, what the hell do I do here, right? It was only bought because of the whole ventilator angle, right? I thought, all right, maybe they'll come. It was a COVID play that worked out. It tripled, and I don't even think I trimmed though, which was a mistake because I haven't been on the ball. Perceptive owned it too. Oh, I didn't know that. Oh. I think they're a good... I didn't know they owned it. Oh. Well, now I'm less likely to trim. Don't they know their shit? My impression has been they know their shit. And so this could be a 10-bagger because of growth, Vapotherm. And then I thought there'd be increased demand for their new age, like ventilators or whatever the hell. I can't remember exactly what it was. I'm not an expert on that type of stuff. But I thought that could be one of those tag baggers for growth reasons, which I don't usually deal in. But because everything sold off indiscriminately, I'm like, yeah, I could pick some of that up. But can I just see Prescott? What else do they deal in? It would be nice if they were a value shop. If someone saw value in this like I did, someone better than me. Oof. Oh, I think I own that. Wow. Interesting group of stocks, huh? Systemax, Yelp. What's that? Camper, Simpress. Whoa, not many stocks. Oh, okay. Handful of stocks for this firm. Oh, this might be it. Is there another Prescott? Yeah, I think there is. I think this is the one I often see. I think like a shit ton of positions. No. Okay. But did you see? I saw Civio. This is it. Yeah, this is the company. Okay, different Prescott. Still, insider buying. I mean, firm buying. All right, maybe I'll sit on it for a bit. We'll sit on it. Let's just give it some time. See how it reacts. It sucks that it didn't it sell off like 30% or 40%? Something ugly. You know what I mean? Oh, look at that. When did I get? I missed the low. I didn't get the low. I got it here. That's a nice chart though. Ooh, that's why I think I saw it today. It was down again. I'm like, what the hell is going on? That's not a good chart. Damn. It's gonna fall 50%. That's a bummer. It rose so quickly, and again, I thought it was gonna be one of those. It could be a growth. Maybe we'll see. I'm gonna sit for now. Sit on Vapo. Sit on Vapo for now. Watch price action. Okay. Let's keep going. What time we got? 9:36. Shit. Oh yeah, we're going through here. X out of this, X out of this, X out of this. Make some. Okay, I'm pretty sure I saw some more, right? Oh yeah, this one looked interesting. Oh shoot. Oh no, another one. Ah. This was a good company. I'm pretty sure this CEO. Listen to this. I'm pretty sure the CEO of this guy, CEO of this company. Did he post? Did he post on Seeking Alpha? Is this the firm? It's like a small company. I wouldn't know. I wouldn't know. I don't feel like looking for it right now. Let me do this. Yeah, I think this is it. Thought that was it. Look into it. But it's a decent. It was a historically decent company. I think they like books, rolling out books and stuff. And then I thought, oh man, I didn't know going through this insider buying thing was going to be tough, huh? I didn't know it was going to come across so many missed opportunities. I was tracking it here. It never looked this cheap. I remember thinking, I looked, and right now that appears to have been correct. I remember thinking $5, $6, $7. Not, it's not cheap enough because I thought upside was. Oh, look at that. Well, didn't it pay a huge dividend? Yeah, if you adjust for the dividend, see how I added the underscore there. It paid out. I think that was a dividend it paid. But and then I was unsure. Wow. All right, add another one to the list. Missed up. We need that. We're gonna run out of space. We're gonna run out of space in the other notepad we're gonna put together. I didn't realize there were this many. Oh, this was a mistake. So I wasn't super dialed into this one. Not that big of a mistake. But I remember looking at it. It looked like a high quality company. I won't pull it up now in the extra time. I want to get through the insider buying. For reasons like this is really useful. I hope you find it helpful too, because I do. Because I remember looking at it. I looked at it this year, and I remember thinking not that cheap right here, but then it sold off like everything else did. That's the thing. That's why if you're already tracking the stocks, you're good to go. Boom, boom, boom. Oh, this is trading below $5. That looks interesting. And then March 18th happens, and then trading below $4, and like boom, boom. Then just you're putting chips down on everything you've been tracking. But a decent. I'm surprised how rapidly this run. Oh, is it because because they can ship books to you and stuff? I forget exactly what they did. No, they were just like, I thought they were doing children's books. Children's books. It's so small they don't even have a profile on Yahoo Finance. What? How's that possible? Whatever, it's books. But it looked like it was like a historically decent company. Bummer. And then I remember thinking, the hell is the CEO doing? What's he doing posting on Seeking Alpha? I'm like, oh, he cares about his company. It wasn't. I think I may have owned it, but if I did, it was a small position, and I definitely don't own it. I didn't own it I didn't buy it down at the low prices, which is what matters most right now. But damn, what a smart recovery. Why so smart? Why so serious? Why so smart? You know. I could look into that, maybe later. All right, let's keep going. Oh, anyway, how much do they sell? 177. I'm not getting involved at 15. Out of principle, I'm not getting involved at 15. No, I'm just kidding. Sometimes that's a good idea. As I said, like if it starts working in your favor, that doesn't, and just because it's already doubled doesn't mean you shouldn't be adding to it, right? I'm of course just joking right now. It could make sense to be buying it right here. Like if it's gonna turn into a huge growth story, I would only know that if I dug into it, but I'm not gonna do that. So, this is a way to play real estate. They do don't they do patios or something? Check this. 2 billion. They're doing like rock stuff. What's going on here? How come I don't have my? It didn't work for this one either. Oh, that's weird. I think it might just be breaking on Yahoo Finance. They do like rock stuff, something for real estate where you use. I can't remember. What? Oh yeah. Oh, I got it. Okay, residential products, industrial and infrastructure products. Oh, I don't remember the energy angle. Manufacturer, processor, and distributor of metals and other engineered materials for the building products. Oh, I had in my mind building. I thought it was mostly for the building materials. Anyway, it was on my radar because just another way to play residential real estate. I was thinking, so I have all those charts. Building products. No, excuse me, another way to play building products. But it's not that cheap. There's other. I think CNR. I always thought CNR. Oh, it's above 7. Is it time to add more? I legit think that this could go up quite a bit. There's an article on Seeking Alpha. Check it out. It's a good one. The story has only slightly changed. He's got the right. Where's Seeking Alpha? There it is. He's got the right narrative as to like how like it's it was like a leveraged buyout type thing. Where is it? This one, equity stub. That's what he calls it. I think that's a Greenblatt term. And it used to be NCI Building Systems, but they got no covenants on there. Check it out. Read this. This was. I thought this was good analysis. And as it turned out, it probably he looks wrong because of all that's happened. Right? He's not actually wrong. It's just as it unfolded, it didn't quite go according to plan. But that's how these things work out. I don't hold it against them. It's good I know good analysis, and this is good analysis. And it just didn't quite work out as planned for a number of reasons. But the thesis still holds water, in my opinion. And yeah, check that. I don't have time to go through it now. What the hell have we been doing? What have we been doing for 2 hours, 3 hours? But I agree. Like a takeaway here is that sorry, I'm scrolling down to his conclusion. I apologize. Oh, where's it? He had like a base bear case, and sorry, look if I may scroll to it quickly. Didn't he have a base case? Yeah, he had a bear case, base case, bull case, and what did he get down? Fair value 7, 20, 34. And share price is right here where he had for his bear case, and obviously got way cheaper. I actually did add to the position on the lowest day of BX. I got lucky, right? I added on the day it dipped down to like 2 on I think it was Monday. I think it was the 23rd. Most of the stocks bottomed on March 18th, but this one I think bottomed on March 23rd. Let's see if I got it. Yes. See this? It went up though. I bought right there. Right there. I already had a position. I was sitting on a loss, right? Don't get me wrong. It's not like I stepped into the position here. But I remember thinking CNR sub $3, and I bought, I think it was in the 260s. That in RRC might be one of my better time. Luck. And but remember, March 18th was low. In that March 23rd, I was waiting to deploy. I'm like checking to see what's going to happen. And I thought that might have been the low. Anyway. And then it pulled back, and then now it's looking good again, huh? Sorry, I'm getting off track, but there's better ways to play this than rock. That's what I was getting at. Okay, let's keep going. Okay, LDL. We looked at LDL. The other was it on Friday? We got a little bit of a deep dive for me. It looked interesting, didn't it? And we said it was worth what we thought, $30-$40. I couldn't get to here. I remember thinking that. I think we may have added a value. What are these? And it looks kind of interesting. It's continued its rise. I could see, I remember 30, and even then I didn't feel comfortable with maybe $30 to $40. I could see this, but I don't like buying it at 20. That's not for me. I mean, that's some people could, but I didn't. That's not cheap enough. I would start 10 to 15. But anyway, that must be the insider buying that we were seeing at that time. All right, we're gonna make this. Oh, Nina, that's the one we checked out in the. When we were looking through the spreadsheet. MGM. I don't know if I can. Oh, there's that CC again. All right, let's just check this real quick. That's it. Oh, see what I mean? Look at this. Look at that weight. Got down to $6. And it's almost a 4-bagger. Or MGM. How big is this company? $10 billion. Terrific. That's what I mean. And so that was a excuse me, a 2 billion, 3 billion market cap. And now and it still went up 3-4x. Capital can go into it. And obviously, we know why it sold off. Casinos and stuff having to shut down, and then there being question mark, blah, 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 blah. You know. But you believe this? Mr. Market. Mr. Market. Thank you. I didn't buy it, but I'm just saying you gotta appreciate that shit. Okay, let's keep going. Pfizer, I mean, good company. Tenneco, we already took a look at Tenneco. IOC in this buying. Wait, we saw even more, right? Yeah, we saw a bunch this week. Yeah, this is bullish. Do I add to Tenneco again? I remember I added just before this. Where's Tenneco at? I might have to do this one. Damn, we didn't get to our daily movers though, did we? 0.46. I might say add to 10. Even though I just did it, but that insider buying. I wish Carl was buying. CFO? Is he new? Didn't they have to like clean? Did they have to clean house, get everyone new? That's always, it's less meaningful. Look, yeah, I mean, he didn't have that many shares to begin with. Plus 600%. I don't know. All right, let's keep going. Go, 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 go. I mean, but screen and inside, this is, and then we saw Xerox. We already checked that out. I could have sworn there were more BXC, but it turned out not to be an insider buy, so just noise. The other Xerox one, UGI. Interesting. That's a lot of oh, it's all the same. It's all the same file. It's all the same dollar amount. B. Riley, we talked about them, but not their company specifically, what they were dealing in themselves. Here's GPRE. All right, maybe that's it. What I can also do is group them. What are we, August 5th right now? How far along are we? What's the date? How many times have I checked for what the date is today? Okay, SBH. I could have sworn I don't think we checked insider. Oh, I guess that was all of it. I was gonna say I had seen some on Friday, and I don't think we had checked during the stream, and I was like, oh shit, that would have been good to go through. I'm not seeing much. Oh, you can't see it either. LDL again. All right. Okay, let's see if we can go crank through the daily. Let's go to the daily movers. Boom. Close it out. What the hell? Biotech? Positive results? Damn, that ain't bad. Why didn't you tell me to buy that? How come you couldn't tell me to buy that? Jeez. That would have been a big help. Wow, look at that, huh? Okay. Another biotech, CVGI. Hey, position one of the top performers of the day. Sick. Okay, Chesapeake. 1 cent. Is that even the? Okay, LXU. Oh yeah, this one's wow. This one's Oh, that chart looks interesting. I own this. I own this back here. I own this right here. There was one of those batches, 2015, 2016, and I think I got a double, and that was it. And then it's been down, and they did some weird stuff. Wow, I forgot I was still alive. I think a PE firm got involved with this one too. And then I got turned off. And even right now, I've gone sour on it. They did HVAC stuff and something else. It was like a 2 business model type thing. But then whoever got involved, and I'm like, oh, this is different. Okay, Cumulus. That's a tough one to value. That's why it's probably, I think it's super volatile, right? Oh, this looks interesting. Oh, shit. That looks interesting. I think it's super leveraged. Any buying? Ugh. Only selling. From funds. Anyone own it? Nah. I'd look another time. Okay. Westport. Oh, nice. Yep. We saw that one. Chart's looking good. IPI. I don't know what's going on with IPI. IPI got higher quality assets, and the management owns most of the company, like 30, 40, 50%, something crazy. And they were actively buying. Then they stopped buying, and then I don't really know what they're doing. Then they have been diversifying into oil and gas industry by way of water rights and stuff. And but then you read the press, then you read like the conference call and stuff. I don't know what they're doing. They haven't really bounced back as they were in position too back in the day, and it was like a solid 4 or 5 bagger on it. And I still think it has higher quality assets, but in trade where it is, and I don't know what management's talking about. It's kind of a bummer. So it's a small position, and I would buy more because they do have potash assets and water rights in the U.S. and stuff. Yeah. All right, I think we looked at DSK. That was a trucking company. That one looked. Oh, it's up today again. Wasn't it? Were we looking at because it was up? Oh shit, yeah, huh? I think we looked on Friday. Now it's taken off. It's a this. I don't know if there's a high short interest in this company, but if there is, this is the type super leveraged, ugly ass chart. People will probably shorten it, and then if it turns out that they're not going bankrupt, that's where it goes up, right? It's already 5. It's already 6 bags. It's a damn 7 bagger. I add this in the note. How come no trucking companies? Yeah, I don't know why. YRCW in particular, the super risky ones were YRCW in this one, DSK. I would have grouped those in with the candidates of companies that could go bankrupt, but there's better trucking companies that we talked about on the last stream, and I don't even know why though. I don't know why those other ones were in my portfolio for the risky ones. Although there's not too many high quality smaller ones. They're all kind of sketchy, but these two are super sketchy, I remember thinking. Okay, Kirkland, Team, Inc., FlexShape, FPay. Yeah, what are they? Yeah, I thought they were cheap. I'm pretty sure like the average cost like $1.05. I thought, check out the business model, see what you think. Oh, it's in here. A lease-to-own retailer and lease-to-own payment solution provider. Yeah, you know what I mean? Like you lease the stuff, and I think there's like an online platform or something. It seemed like it had not a super strong balance sheet or anything like that. But if there's something there, and I don't know, that's not the type of thing I would have conviction in. But I'm like, that's one of those. I'll put a chip down on that. Gannett. What's their news? Are they not going bankrupt after all? I've owned and sold positions in it. I've owned it back in the day, but even right now, I think I bought some, and then I was like, I think it's gonna go bankrupt, and now I'm like, I'm not sure. Can we check the bonds real quick? How are we doing on time? Oh shit, are we gonna make it? Are we gonna make it? Oh, we gotta get through the daily. Come on, maybe we should start with that. You know what I mean? Damn, those bond prices are holding up, huh? What the hell? They're going to get paid because they know they make the company throws off. That doesn't throw off cash, but it generates cash. They'll probably get paid. The equity holders, I don't know. And I don't even know if they're going bankrupt, but damn, that might be one to look into. Is GCI, that's what I say. Is GCI going bankrupt? That's the question. Their insiders were buying in March right up to February, I think. Check this. Oh, excuse me, into March. I remember thinking they were crazy. I mean, because everything was selling off. I'm like, what are you doing? I remember them buying in last year too. They bought it. No, I remember this buying in November, late last year. I remember them buying in March. I'm like, oh, what are you doing? Wait, I remember thinking it was too early. That's what I was thinking. I say I'm buying in March. I'm like, what are you doing? It is way too early to be dealing in this because it's a risky business. And as it turned out, I was right on that front. Of course, I've been wrong on other stuff. But on that one, I'm like, what are you doing? Stop buying it so aggressively. They were going so aggressively within this 1 week. Where are all the trade dates? Oh, they were all the 5th and then the 9th. I'm like, slow down. This is going to take time. Okay. GCI, UFI. We looked into UFI. That one looks interesting. I might add to that one. I might add to UFI. Oh, did I pull up the balance sheet in time? Oh, no, we're not going to make it. UFI, did I pull it up? UGI. Didn't I pull up other ones we wanted to look at? See, I don't even remember. No, we did Western Digital. Jesus, this thing keeps clicking up. Okay, RRC, CPE. Oh, I guess I didn't. Okay. No problem. Just rush hour. Okay, let's go. Tenneco. CPS. Oh, this one looked interesting because I didn't love the financials, but it looked like the chart it looks like I'm like, oh, if it comes back in favor, it could go 5. Look at this chart, huh? I mean, that looked overvalued to me when I looked at the fundamentals. Now I've been kind of waiting for something to happen, either on insider buying or something, or some activists getting involved. There's nothing going on. Nothing going on. Someone write an article. Nothing. And I'm like, nothing. And then I'm like, and then the balance sheet looks precarious. To get the bonds up. Oh, I've definitely looked up Cooper. I do Cooper. It's not Cooper Tire and Rubber though. Damn. Okay. Yeah, this might be an ad. It's an auto play. It's a play on the auto industry. Okay. Auto parts. That's the thing. The upside is like chart based. You know what I mean? Like 150. But I just remember thinking like, whoa, it was hugely in favor at one time. Could we get back there again? CMT, no. Timken Steel, I've owned them. Peabody, wow, even Peabody's up today. Huh? Are they going bankrupt again? Maybe. I think, it's in the portfolio. I dabbled a little bit just thinking if they don't go bankrupt, that metallurgical steel is going to worth a ton. But I don't know that they'll survive. They could. That's why I got the position. And then I think it's going up way higher. What's it doing? This is worth checking out. The price has been, like, look at this chart. This is not a bad chart. You know what I mean? If it can survive. Oh, so it really sold off and then it's bounced back up. So it's still a decent price if it's going to survive. The problem is I just don't. Let me just check this. Look at these bonds. Oh, 50. Still not the lowest, right? I mean, it's distressed, no doubt about it. But it's still not super clear it's going bankrupt. It's not looking good. It's not looking good. They need a rapid recovery, and I don't know that they're going to get it. So right now I'm like 50-50. I'll keep an eye on the chart. That's what I'm doing. And for some news or for someone to take action or whatever. And someone wrote the article on that someone wrote a good article on it suggesting they were probably going to go bankrupt. Okay, TWI, run low on time, down to the last minute. CLF, Park Holdings, Cleveland, Dave & Buster's. Dave & Buster's. I went to Dave & Buster's in March, if you can believe that. Can you believe that? They hadn't closed down yet. It was like right before everything got crazy. I'm like, oh, that's too funny to have gone there right then. And then I had to buy it for the story, right? And then, okay, here we go. Not much down today. Okay. Nothing that I'm even tracking, but nothing really. RRTS, kind of noise. Kodak down. Yeah, I saw the Kodak news. Huh? Is it a buy now? I don't know. Oh, shit. Yeah, okay. All right, we got through the daily movers, too. We had to move quick, though, huh? Today was a hell of an up day. Maybe, yeah, I'm still trying to work out what we're going to do. Again, I've said this so many times. As I get more familiar with, or try to work through, as I get refamiliarize myself with the companies in the portfolio and stuff. There's a lot of updates to do, but as I get more up to speed with that stuff, then we get in more of a routine. Like check the daily movers, check the insider transactions, and eventually there's going to be less to do. Right now there's so much to do because I got to catch up. Then I'll get caught up, and then we'll have talked about a whole bunch of companies. Then there'll be less to do. So then we'll figure out what we do then. But for now, I'm just trying to work through stuff. Oh, we still didn't get to look through all the charts of the Run Kitty portfolio. I want to do that. Well, maybe we'll plan on that for Wednesday, as in I'll export everything to a chart. We'll go through stock charts, go through each of the charts, just get a feel for everything. We're looking at some of the fundamentals and eyeballing stuff, but looking at the charts is helpful for just a quick screening of stuff. And was there anything else that stuck out to me that we still haven't got to like the industry tab and stuff because we haven't been doing much screening. You know, it's like I said, catching up to date with stuff. But all right, we'll cut it here because clearly we're gonna have plenty of time. We're gonna have plenty of stuff to do on Wednesday. You know what I mean? So cheers. Hope you enjoy. Hope you have fun, and you have a nice night. And we'll farewell with some kitties here. I hope you enjoy that, and I'll see you on Wednesday. Peace out. All right, let me just get it queued up here. Outro. All right, later now.